well, it's so simple, but it's powerful. He says, rule no one is never lose money. Rule no two is never forget rule number one. So why is this like the core of his whole approach?
Well, you got to understand, in investing, it's not just about scoring points. It's about not getting taken down. Defense is just as important as offense.
Most people, they're all about, how much they can make. But Buffett, he's different. He's all about minimizing the risk, the downside.
Yeah, imagine you spend years, you're carefully building your wealth, right?
Yeah.
Growing that portfolio, but one bad decision, one miscalculated risk, and poof, it's all gone.
Like that game Jenga. You carefully pull out the blocks, you build higher and higher, but one wrong move, and bam, the whole tower crashes down.
And that's why Buffett, he's all about discipline and like really understanding what you're putting your money into. He doesn't just swing at every pitch,
Okay, and speaking of pitches, his second tip uses this really cool baseball analogy. He says, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble.
This is about being ready. When you've done your research and that golden opportunity pops up, you got to grab it.
And it's not just about, the money being ready. It's about like your mind being ready too, right?
Yeah, totally. If you hesitate, if you second guess or try to time the market perfectly, you'll miss out. That's the thimble mentality.
So how do we get that bucket mindset? Like, how do we prepare for those moments when it starts raining gold?
It starts with, knowing what you want to achieve with your investments, understanding how much risk you can handle, and doing your due diligence.
And I think maybe just as important, it's about trusting your gut. Like, when you see an opportunity and it fits your strategy, don't be afraid to jump on it.
Think about how Buffett did it. Like when he bought See's Candies back in '72, he saw a company, a strong brand, loyal customers, and, room to grow.
He didn't wait for a better price.
Yeah.
He saw the value and he went for it.
And it's been a huge win for Berkshire Hathaway, See's Candies. It's been a steady performer, great returns year after year.
Okay, let's move on to tip number 3. And this one might surprise you. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
A lot of investors, they get caught up chasing those bargains, trying to pinch pennies. But Buffett, he focuses on the quality of what you're buying.
He's saying, don't compromise on quality just to save a buck or two.
Exactly. A fair company at a discount, it might seem like a steal, but in the long run, its potential might be limited. A wonderful company, even if it costs a bit more, offers more value over time.
It's like, think about buying a car. You could get a used clunker for cheap, but it might break down all the time and end up costing you more in repairs.
Right. Or you could invest in a car, maybe a bit more expensive up front, but it's reliable. It'll run well for years.
It's about looking past the initial price and thinking about the value over time.
Look at one of Buffett's most famous investments, Coca-Cola, late 1980s. He buys a big chunk of the company, even though some people thought it was overpriced at the time.
So what did he see that everyone else missed?
He saw the power of that Coca-Cola brand, its global reach, how it consistently made money. He was betting on a great company with a lot of room to grow.
And that bet, well, it paid off big time. Coca-Cola, it's still a core part of Berkshire Hathaway's portfolio, made billions in returns.
So next time you're looking at an investment, remember, don't just chase the cheapest thing. Look for quality and something with long-term potential.
Okay, ready for tip number 4. This one's about, patience and choosing carefully. He says, the stock market is a no-called strike game. You don't have to swing at everything, you can wait for your pitch.
Buffett's saying, be picky. You don't got to buy every hot stock or follow every trend.
Stay disciplined. Wait for those opportunities that really fit your investment strategy.
Imagine you're at bat right. You wouldn't swing at every single pitch. You wait for that perfect one, the one you can knock out of the park.
And this goes back to his first rule. Don't lose money. By being choosy, waiting for the right pitch, you're less likely to strike out.
And sometimes the best thing to do is not swing at all. Staying out of the game, holding on to your money can be just as good as making a new investment.
Look at how he invested in Apple. For years, he avoided tech stocks. He said they were outside his area of expertise.
But then, 2016, he starts buying Apple. He sees the strong brand, loyal customers, those innovative products.
He waited for the right moment. And when it came, he went all in.
And that decision, well, it's been a home run for Berkshire Hathaway. Apple's one of his biggest holdings now.
So the lesson here is, don't feel like you got to invest in something just because everyone else is. Do your research, Wait for the right time, and don't be afraid to sit on the sidelines if nothing looks good.
Buffett's all about the long game, not those quick wins.
Okay, on to tip number 5. And this one is classic Buffett. We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. So how does this contrarian approach actually work in the market?
This is all about the psychology of investing. When markets are up and everyone's feeling good, it's easy to get swept up in the excitement.
It's like, FOMO, the fear of missing out. People start making impulsive decisions.
Exactly, and that's when Buffett gets cautious. He knows that too much excitement can lead to things being overpriced, more risk.
So when everyone's greedy, he's looking for the exits.
Not always. He's carefully looking at whether the market is really reflecting the true value of things.
And then the opposite. When markets are crashing, everyone's panicking. That's when he sees opportunity.
Right. When fear takes over, prices can drop lower than they should, creates chances to buy for those who've done their homework and aren't afraid to go against the crowd.
So it's all about staying calm, not getting caught up in the emotional roller coaster of the market.
That's Buffett's contrarian approach, having the discipline to think for yourself, act rationally, even when everyone else is doing the opposite.
It's like that saying, buy low, sell high. But it's harder to do than to say, isn't it?
Definitely. It takes courage to go against the flow, to buy when everyone's selling, sell when everyone's buying.
But that's where the real wins are. According to Buffett, by being contrarian, you can take advantage of market inefficiencies, make some serious returns.
Remember the 2008 financial crisis? A lot of investors were freaking out, but Buffett, he was busy making deals, buying up undervalued stuff.
He saw opportunity in the chaos. Because he wasn't driven by fear, he was looking at the real value.
And that's a key takeaway. Don't let emotions control your decisions. Do your research, stay disciplined, be ready to act when everyone else is frozen.
So, to sum it up, be greedy when others are fearful, but only if your research backs it up. Don't just blindly follow the crowd.
Exactly. Think for yourself. Let logic, not emotions, guide your investments.
We've covered a lot. 5 simple but powerful principles that have driven Warren Buffett's success.
And what's really cool is how these ideas apply to more than just investing. They give you insights into decision-making, risk management, navigating uncertainty in all parts of life.
Okay, so we've gone through these 5 key principles from Warren Buffett about investing.
And what's amazing is how they all fit together. It's not just about money. It's a way of thinking about risk, about opportunity, about value.
It's like having a mental model for making better decisions, right?
Yeah, exactly. Let's step back and look at how these principles work, as a whole.
So first, we have that foundation. Rule no 1 is never lose money, which is all about, managing risk, protecting what you've got.
It's about avoiding those huge losses, the ones that can set you back for years, even if it means, missing out on some potential gains along the way.
Then there's that bucket idea. When you see a good opportunity, be ready to act, but only after you've done your research.
It's finding that balance, patience, and knowing when to jump. You're not chasing every hot trend, but when you see something that fits your plan, you grab it.
And this connects to Buffett's idea of focusing on quality, right? It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
He's reminding us, the cheapest thing isn't always the best. Sometimes it's worth paying a bit more for something high quality, a company that has a real edge and can keep growing.
It's like buying a house. You could go for the cheapest one you can find, but it might need a ton of work, end up costing you more in the long run.
Yeah, or you could invest in a house that's, well built, even if it costs a little more upfront. But it'll be solid, it'll last.
It's about looking past the price tag and seeing the long-term value, what you're really getting.
And then there's that baseball analogy, right? The stock market is a no-called strike game. You don't have to swing at everything, wait for the right pitch. This is about knowing what you're good at, your style, and staying in your lane.
And lastly, we have that contrarian approach. Be fearful when others are greedy, and greedy only when others are fearful.
This is about, how people's emotions affect the market. When everyone's excited or scared, it can mess with prices, create chances for those who stay rational.
What's interesting is how these principles apply to more than just money, right? To other parts of life.
Absolutely. Like, take that idea of minimizing losses. How does that apply to how we manage our time, for example?
We can ask ourselves, are we spending time on things that really matter, things that get us closer to our goals? Or are we wasting time on things that drain our energy, don't bring us joy?
It's about, really thinking about how we use our time, because it's our most valuable resource.
And that principle of waiting for your pitch. That could apply to like career decisions. We don't have to take the first job offer that comes along.
We can, be choosy, think about our skills, what we're passionate about, wait for that right opportunity, the one that really fits what we want.
And what about Buffett's idea of focusing on quality? That could apply to like our relationships.
Definitely. Are we investing our time, our energy in relationships that are, supportive, enriching, that bring out the best in us? Or are we, settling for relationships that drain us, hold us back?
It's about recognizing that, we deserve to be around people who lift us up, inspire us to grow.
And that contrarian approach, that can apply to just making decisions in general. When everyone's rushing to follow the latest trend, it's good to stop, ask yourself, is this really right for me?
It's about thinking for yourself, questioning the conventional wisdom, making decisions based on your own values, what you want to achieve.
Buffett's principles, they encourage us to be, deliberate, thoughtful, and to always be learning, always growing.
They remind us that success, whether it's investing or in life, it's not about, luck or shortcuts.
It's about having a solid plan, knowing how to manage risk, and taking advantage of opportunities when they come along.
And as we wrap up this part of our deep dive, we want to leave you with this question. How can you apply these principles to your own life?
What areas of your life could benefit from a more, disciplined, long-term approach?
What are some of those buckets you need to get ready for those moments when it starts raining gold?
And what are some areas where, you might need to be more contrarian, go against the grain, forge your own path?
These are, questions worth thinking about because as Warren Buffett has shown us, the principles of good investing, they can be used to create value in all parts of life. Okay, so we've been talking about Warren Buffett, his investing wisdom, and it's pretty clear that his ideas, they go way beyond just Wall Street,
Yeah, they're like a set of tools for making smarter decisions, not just about money, but in all parts of life.
And to really see how these principles work, let's look at one of Buffett's most famous investments, Coca-Cola.
Yeah, it's a perfect example of how he combines research, patience, and that contrarian thinking.
He bought a big chunk of Coca-Cola back in '88, spent over $1 billion to get like 6.2% of the company.
And, at the time, some analysts, they were scratching their heads. They thought Coke was overpriced, that its growth was limited.
But Buffett, he saw something else. He saw the power of that brand, how it's known everywhere, and how it consistently made money.
He didn't get caught up in those short-term market swings or what other people were saying. He did his research. He believed in the long-term value.
And this goes back to his principle, right? It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
Right. He was willing to pay a bit more for quality for a company with a real competitive edge.
And he was also, going against the grain, being contrarian. While others were doubtful, he saw an opportunity.
He understood that the market sometimes is driven by emotion, not logic, and that fear and greed, they can really distort prices.
So what did Buffett see in Coca-Cola that others missed?
He saw the power of, habits. People all over the world, they love their Coke. It was a daily thing, and that wasn't likely to change.
He also saw, the potential for growth. Coca-Cola was already global, but there were still so many markets to tap into.
And he was impressed with the management team. He thought they were competent, focused on the long term.
So he bought in, and, the rest is history, as they say.
Coca-Cola, it's been a fantastic investment for Berkshire Hathaway, generated billions in dividends. And the stock price, it's gone way up.
It shows, Buffett's ability to find those undervalued assets, to see value where others don't.
And it reminds us that being patient, having that long-term view, can really pay off.
So what are the key takeaways from Buffett's Coca-Cola investment?
Well, first, it shows how important research is. Don't just follow the crowd or those headlines. Dig deeper, understand the business, look at its long-term potential.
To second, be patient. Don't expect to get rich quick. Great investments, they take time.
And third, don't be afraid to be contrarian. If you've done your research and you believe in something, don't let other people's opinions sway you.
Think for yourself. Trust your gut. Be willing to go against the flow.
And, as we wrap up this deep dive into Warren Buffett's wisdom, we want to leave you with this.
His principles, they're not just about, making money. They're about making better choices, managing risk, creating real value in every part of your life. We're going deep, really deep into the mind of, one of the greatest investors ever, Warren Buffett.
Yeah.
Okay, so let's jump right in. Buffett's first rule, it's so simple, but it's powerful. He says rule no 1 is never lose money. Rule no 2 is never forget rule number 1. So why is this like the core of his whole approach?
Well, you got to understand, in investing, it's not just about scoring points. It's about not getting taken down. Defense is just as important as offense.
Most people, they're all about, how much they can make. But Buffett, he's different. He's all about minimizing the risk, the downside.
Yeah, imagine you spend years, you're carefully building your wealth, right?
Yeah.
Growing that portfolio, but one bad decision, one miscalculated risk, and poof, it's all gone.
Like that game Jenga. You carefully pull out the blocks, you build higher and higher, but one wrong move, and bam, the whole tower crashes down.
And that's why Buffett, he's all about discipline and like really understanding what you're putting your money into. He doesn't just swing at every pitch,
Okay, and speaking of pitches, his second tip uses this really cool baseball analogy. He says, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble.
This is about being ready. When you've done your research and that golden opportunity pops up, you got to grab it.
And it's not just about, the money being ready. It's about like your mind being ready too, right?
Yeah, totally. If you hesitate, if you second guess or try to time the market perfectly, you'll miss out. That's the thimble mentality.
So how do we get that bucket mindset? Like, how do we prepare for those moments when it starts raining gold?
It starts with, knowing what you want to achieve with your investments, understanding how much risk you can handle, and doing your due diligence.
And I think maybe just as important, it's about trusting your gut. Like, when you see an opportunity and it fits your strategy, don't be afraid to jump on it.
Think about how Buffett did it. Like when he bought See's Candies back in '72, he saw a company, a strong brand, loyal customers, and, room to grow.
He didn't wait for a better price.
Yeah.
He saw the value and he went for it.
And it's been a huge win for Berkshire Hathaway, See's Candies. It's been a steady performer, great returns year after year.
Okay, let's move on to tip number 3. And this one might surprise you. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
A lot of investors, they get caught up chasing those bargains, trying to pinch pennies. But Buffett, he focuses on the quality of what you're buying.
He's saying, don't compromise on quality just to save a buck or two.
Exactly. A fair company at a discount, it might seem like a steal, but in the long run, its potential might be limited. A wonderful company, even if it costs a bit more, offers more value over time.
It's like, think about buying a car. You could get a used clunker for cheap, but it might break down all the time and end up costing you more in repairs.
Right. Or you could invest in a car, maybe a bit more expensive up front, but it's reliable. It'll run well for years.
It's about looking past the initial price and thinking about the value over time.
Look at one of Buffett's most famous investments, Coca-Cola, late 1980s. He buys a big chunk of the company, even though some people thought it was overpriced at the time.
So what did he see that everyone else missed?
He saw the power of that Coca-Cola brand, its global reach, how it consistently made money. He was betting on a great company with a lot of room to grow.
And that bet, it paid off big time. Coca-Cola, it's still a core part of Berkshire Hathaway's portfolio, made billions in returns.
So next time you're looking at an investment, remember, don't just chase the cheapest thing. Look for quality and something with long-term potential.
Okay, ready for tip number 4. This one's about, patience and choosing carefully. He says, the stock market is a no-called strike game. You don't have to swing at everything, you can wait for your pitch.
Buffett's saying, be picky. You don't got to buy every hot stock or follow every trend.
Stay disciplined. Wait for those opportunities that really fit your investment strategy.
Imagine you're at bat right. You wouldn't swing at every single pitch. You wait for that perfect one, the one you can knock out of the park.
And this goes back to his first rule. Don't lose money. By being choosy, waiting for the right pitch, you're less likely to strike out.
And sometimes the best thing to do is not swing at all. Staying out of the game, holding on to your money can be just as good as making a new investment.
Look at how he invested in Apple. For years, he avoided tech stocks. He said they were outside his area of expertise.
But then, 2016, he starts buying Apple. He sees the strong brand, loyal customers, those innovative products.
He waited for the right moment. And when it came, he went all in.
And that decision, it's been a home run for Berkshire Hathaway. Apple's one of his biggest holdings now.
So the lesson here is, don't feel like you got to invest in something just because everyone else is. Do your research, wait for the right time, and don't be afraid to sit on the sidelines if nothing looks good.
Buffett's all about the long game, not those quick wins.
Okay, on to tip number 5. And this one is classic Buffett. We simply attempt to be fearful when others are greedy and to be greedy only when others are fearful. So how does this contrarian approach actually work in the market?
This is all about the psychology of investing. When markets are up and everyone's feeling good, it's easy to get swept up in the excitement.
It's like, FOMO, the fear of missing out. People start making impulsive decisions.
Exactly, and that's when
All right,
Buffett gets
so,
cautious.
let's
He
dive right
knows
in
that
today.
too much excitement can lead
And,
to things being
look-
overpriced, more risk.
So when everyone's greedy, he's looking for the exits.
Not always. He's carefully looking at whether the market is really reflecting the true value of things.
And then the opposite. When markets are crashing, everyone's panicking. That's when he sees opportunity.
Right, when fear takes over, prices can drop lower than they should, creates chances to buy for those who've done their homework and aren't afraid to go against the crowd.
So it's all about staying calm, not getting caught up in the emotional roller coaster of the market.
That's Buffett's contrarian approach, having the discipline to think for yourself, act rationally, even when everyone else is doing the opposite.
It's like that saying, buy low, sell high. But it's harder to do than to say, isn't it?
Definitely. It takes courage to go against the flow, to buy when everyone's selling, sell when everyone's buying.
But that's where the real wins are. According to Buffett, by being contrarian, you can take advantage of market inefficiencies, make some serious returns.
Remember the 2008 financial crisis? A lot of investors were freaking out, but Buffett, he was busy making deals, buying up undervalued stuff.
He saw opportunity in the chaos. Because he wasn't driven by fear, he was looking at the real value.
And that's a key takeaway. Don't let emotions control your decisions. Do your research, stay disciplined, be ready to act when everyone else is frozen.
So, to sum it up, be greedy when others are fearful, but only if your research backs it up. Don't just blindly follow the crowd.
Exactly. Think for yourself. Let logic, not emotions, guide your investments.
We've covered a lot. 5 simple but powerful principles that have driven Warren Buffett's success.
And what's really cool is how these ideas apply to more than just investing. They give you insights into decision making, risk management, navigating uncertainty in all parts of life.
Okay, so we've gone through these 5 key principles from Warren Buffett about investing.
And what's amazing is how they all fit together. It's not just about money. It's a way of thinking about risk, about opportunity, about value.
It's like having a mental model for making better decisions, right?
Yeah, exactly. Let's step back and look at how these principles work, as a whole.
So first, we have that foundation. Rule no 1 is never lose money, which is all about, managing risk, protecting what you've got.
It's about avoiding those huge losses, the ones that can set you back for years, even if it means, missing out on some potential gains along the way.
Then there's that bucket idea. When you see a good opportunity, be ready to act, but only after you've done your research.
It's finding that balance, patience, and knowing when to jump. You're not chasing every hot trend, but when you see something that fits your plan, you grab it.
And this connects to Buffett's idea of focusing on quality, right? It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
He's reminding us, the cheapest thing isn't always the best. Sometimes it's worth paying a bit more for something high quality, a company that has a real edge and can keep growing.
It's like buying a house. You could go for the cheapest one you can find, but it might need a ton of work, end up costing you more in the long run.
Yeah, or you could invest in a house that's, well built, even if it costs a little more upfront. But it'll be solid, it'll last.
It's about looking past the price tag and seeing the long-term value, what you're really getting.
And then there's that baseball analogy, right? The stock market is a no-called strike game. You don't have to swing at everything, wait for the right pitch. This is about knowing what you're good at, your style, and staying in your lane.
And lastly, we have that contrarian approach.
Hmm.
Be fearful when others are greedy, and greedy only when others are fearful.
This is about, how people's emotions affect the market. When everyone's excited or scared, it can mess with prices, create chances for those who stay rational.
What's interesting is how these principles apply to more than just money, right? To other parts of life.
Absolutely. Like, take that idea of minimizing losses. How does that apply to how we manage our time, for example?
We can ask ourselves, are we spending time on things that really matter, things that get us closer to our goals? Or are we wasting time on things that drain our energy, don't bring us joy?
It's about, really thinking about how we use our time because it's our most valuable resource.
And that principle of waiting for your pitch. That could apply to like career decisions. We don't have to take the first job offer that comes along.
We can, be choosy, think about our skills, what we're passionate about, wait for that right opportunity, the one that really fits what we want.
And what about Buffett's idea of focusing on quality? That could apply to like our relationships.
Definitely. Are we investing our time, our energy in relationships that are, supportive, enriching, that bring out the best in us? Or are we, settling for relationships that drain us, hold us back?
It's about recognizing that, we deserve to be around people who lift us up, inspire us to grow.
And that contrarian approach, that can apply to just making decisions in general. When everyone's rushing to follow the latest trend, it's good to stop, ask yourself, is this really right for me?
It's about thinking for yourself, questioning the conventional wisdom, making decisions based on your own values, what you want to achieve.
Buffett's principles, they encourage us to be, deliberate, thoughtful, and to always be learning, always growing.
They remind us that success, whether it's investing or in life, it's not about, luck or shortcuts.
It's about having a solid plan, knowing how to manage risk, and taking advantage of opportunities when they come along.
And as we wrap up this part of our deep dive, we want to leave you with this question. How can you apply these principles to your own life?
What areas of your life could benefit from a more, disciplined, long-term approach?
What are some of those buckets you need to get ready for those moments when it starts raining gold?
And what are some areas where, you might need to be more contrarian, go against the grain, forge your own path?
These are, questions worth thinking about because as Warren Buffett has shown us, the principles of good investing, they can be used to create value in all parts of life. Okay, so we've been talking about Warren Buffett, his investing wisdom, and it's pretty clear that his ideas, they go way beyond just Wall Street,
Yeah, they're like a set of tools for making smarter decisions, not just about money, but in all parts of life.
And to really see how these principles work, let's look at one of Buffett's most famous investments, Coca-Cola.
Yeah, it's a perfect example of how he combines research, patience, and that contrarian thinking.
He bought a big chunk of Coca-Cola back in '88, spent over $1 billion to get like 6.2% of the company.
And, at the time, some analysts, they were scratching their heads. They thought Coke was overpriced, that its growth was limited.
But Buffett, he saw something else. He saw the power of that brand, how it's known everywhere, and how it consistently made money.
He didn't get caught up in those short-term market swings or what other people were saying. He did his research. He believed in the long-term value.
And this goes back to his principle, right? It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
Right. He was willing to pay a bit more for quality for a company with a real competitive edge.
And he was also, going against the grain, being contrarian. While others were doubtful, he saw an opportunity.
He understood that the market sometimes is driven by emotion, not logic, and that fear and greed, they can really distort prices.
So what did Buffett see in Coca-Cola that others missed?
He saw the power of, habits. People all over the world, they love their Coke. It was a daily thing, and that wasn't likely to change.
He also saw, the potential for growth. Coca-Cola was already global, but there were still so many markets to tap into.
And he was impressed with the management team. He thought they were competent, focused on the long term.
So he bought in, and, the rest is history, as they say.
Coca-Cola, it's been a fantastic investment for Berkshire Hathaway, generated billions in dividends. And the stock price, it's gone way up.
It shows, Buffett's ability to find those undervalued assets, to see value where others don't.
And it reminds us that being patient, having that long-term view, can really pay off.
So what are the key takeaways from Buffett's Coca-Cola investment?
Well, first, it shows how important research is. Don't just follow the crowd or those headlines. Dig deeper, understand the business, look at its long-term potential.
To second, be patient. Don't expect to get rich quick. Great investments, they take time.
And third, don't be afraid to be contrarian. If you've done your research and you believe in something, don't let other people's opinions sway you.
Think for yourself. Trust your gut. Be willing to go against the flow.
And, as we wrap up this deep dive into Warren Buffett's wisdom, we want to leave you with this.
His principles, they're not just about, making money. They're about making better choices, managing risk, creating real value in every part of your life.
The euro.
Okay.
Seems to be having a little bit of a tough time against the dollar lately.
Yeah.
The euro about to totally tank.
Well, let's see.
What do you think?
We'll break down the recent trends and all the expert opinions
Right.
and give you an idea of what to watch for as we head into the new year.
Exactly.
So to set the scene,
Okay.
it's important to understand, why the euro is struggling.
Right.
We saw those comments from ECB President Christine Lagarde to the Financial Times,
Right.
and she seems to be pretty confident that inflation in the eurozone is under control.
Yeah, she even said they're close to hitting that 2% inflation target sustainably.
Right.
But that's where things get interesting because the Federal Reserve over in the U.S. sending a totally different message,
All right, let's dive into
completely
something.
hinting at fewer interest rate cuts in 2025
Mhm.
because the U.S. economy seems to be rebounding.
Yeah.
So is it possible that we're looking at two economies going in totally opposite directions?
It certainly seems that way.
Yeah,
And that divergence in their outlooks,
right.
that's a major factor influencing the exchange rate right now.
Now, everybody's talking about this 1.0344 support level.
Right.
What's so important about that number?
Well, you probably already know
Yeah.
that support levels can sometimes signal a potential turning point in the market.
Mm-hmm.
This level is particularly important right now
Okay.
because of where it falls on the chart in relation to, recent price action.
Okay.
And if the euro breaks below 1.0344, it could really gain momentum to the downside,
Oh,
especially with the holidays coming up.
because thinner trading volumes around the holidays
Exactly.
can exaggerate those moves.
Yeah, guy. That's it.
So opportunity for some and maybe a little bit of anxiety for others.
Yeah, exactly.
Now every deep dive needs to hear from some experts.
Of course.
Derek Halpenny from MUFG Bank.
Okay.
He's predicting the euro will weaken even further early next year,
Mm-hmm.
possibly even reaching parity with the dollar.
Wow.
Pretty bold statement.
That is a bold statement.
But he does think it'll recover later in 2025.
Okay.
Interestingly, his prediction isn't just based on the economic picture right now.
Right.
He's factoring in potential political shifts within the Eurozone,
I see.
particularly in Germany.
Interesting.
So he's looking beyond just the pure economic data.
Yeah, he's taking a broader view.
Okay, that's interesting.
Yeah.
But on the other side of the coin, we've got Bob Savage from BNY Mellon.
Right.
He's putting his money on the US dollar and predicting it will continue to be strong well into 2025.
Okay.
What's making him so optimistic?
Well, there are two main drivers.
Okay.
The first is he believes the upcoming U.S. election is going to create some uncertainty,
Oh, yeah.
and that will lead investors to want the perceived safety of the U.S. dollar.
Yeah, that classic flight to safety.
Exactly.
But is that really going to be enough to keep the dollar strong for that long?
Well, that's where his second driver comes in.
Okay.
The Fed's stance on interest rates.
Right.
Remember, they've signaled fewer cuts in 2025.
Yeah.
And Savage believes this will make the U.S. dollar even more attractive to foreign investors seeking higher returns.
Right. So two very different outlooks.
Yeah.
Halpenny is banking on political shifts and an eventual economic convergence, while Savage is all about U.S. economic strength and the allure of higher interest rates.
Right.
Makes you wonder, are there any other factors that could really disrupt these predictions?
Yeah, like hidden factors.
Yeah, something maybe that neither of them are considering.
That's the million-dollar question, isn't it?
Yeah, it is.
And it leads us to that fascinating data point that came out last Friday.
You mean the U.S. core PCE inflation data for November?
Yes.
The one that came in below expectations
Yes.
and caused a temporary dip in the dollar.
Right. It was a small dip, but it did make people pause,
Yeah. Yeah.
suggest that inflation might be cooling faster than the Fed anticipated.
And if that continues, wouldn't that weaken Savage's argument that the Fed will keep interest rates higher for longer?
Potentially, yes.
Yeah.
It reminds us that these forecasts are based on a snapshot in time.
Right.
Things change quickly, and unexpected data can really shift the entire narrative.
This is why I love doing these deep dives.
Me too.
It's like solving a puzzle with new pieces emerging all the time.
Absolutely. Keeps things interesting.
Yeah, it does. Okay, so we've got these two very different outlooks.
Yeah.
Halpenny sees the euro weakening further, even reaching parity with the dollar
Right.
before a potential recovery later down the line. But Savage,
Yeah.
he's firmly in the dollar's corner, predicting continued strength well into 2025.
Yeah, it's interesting, isn't it?
Yeah.
Because they're basing their predictions on very different factors.
It is.
Halpenny's really emphasizing this political uncertainty within the Eurozone. He thinks it's creating a level of risk that's being priced into the euro.
Right.
And he points to recent elections in Germany and Italy
Mm-hmm.
as evidence of this kind of growing instability.
And wouldn't that instability
Yeah.
make the euro less attractive to investors?
Exactly.
Especially compared to the stability of the US.
Yeah, that's his argument.
Okay.
He thinks that it's just going to make investors kind of shy away
Right.
a little bit.
Okay, so that's an interesting perspective.
Yeah,
What about Savage's take on the dollar? He's pretty bullish, isn't he?
he is. Yeah, and he's not alone.
Yeah.
A lot of analysts see the U.S. as this safe haven
Right.
in a world that seems increasingly unpredictable.
Yeah.
His argument is that this perception of stability in the U.S.,
Mm-hmm.
combined with higher interest rates, is going to keep drawing in foreign investment,
Yeah.
boosting the dollar.
But couldn't that backfire, though?
Potentially.
What if all this investment
Mm.
creates some kind of bubble in the U.S. market
Yeah, that's always a risk.
and then eventually weakens the dollar?
It is a risk, and it's something Savage acknowledges.
Okay.
But he thinks the Fed is aware of this and will take steps to manage it.
Okay.
He points to those statements about being data dependent.
Mm-hmm.
They'll adjust their policies based on, the evolving economic landscape.
So a lot of faith in the Fed's ability to kind of steer the ship.
Yeah, there is quite a bit of faith in them at the moment.
Okay, so let's go back to that inflation data we were talking about earlier.
Okay.
That PCE inflation data.
Right.
If inflation is cooling faster than expected,
Yeah.
like that data suggested,
Yeah,
wouldn't that kind of mess with Savage's prediction?
it could.
Yeah,
If the Fed sees that inflation is under control,
right,
they might be more likely to cut rates sooner,
right.
and that would make the dollar less attractive.
Yeah, less attractive to foreign investors.
Exactly.
And then that would create a window for the euro to regain some ground,
Right.
especially if Halpenny's right about the eurozone getting its act together politically.
Exactly. And that just highlights how interconnected everything is. You
Yeah.
got politics, economics, these data releases,
It's a lot.
all playing a role.
Yeah.
And that's what makes forecasting so tricky.
Speaking of tricky,
Yeah.
there's one more thing we haven't talked about.
Right?
The black swan events
Right.
that could just totally upend everything.
Yeah. Those global events that nobody sees coming.
Yeah.
Things like geopolitical tensions, natural disasters,
Yeah.
or, crazy election results.
Oh, yeah.
They could completely shift sentiment in the markets.
And those are impossible to predict.
Pretty much.
It makes it even tougher on investors and travelers.
It does.
Just trying to make sense of everything.
It really emphasizes the need for diversification
Yeah.
and being flexible.
For sure.
Holding all your eggs in one basket with currency can be really risky,
Especially in today's world.
especially today.
So we've covered a lot of ground here.
Yeah.
Expert opinions, economic indicators,
Mhm.
even talked about those black swan events.
The wild cards.
Yeah. But let's bring it all home now.
Okay.
What does all this mean for you listening out there?
Well, let's start with travel.
Okay.
Probably on a lot of people's minds.
Yeah.
Dreaming of that European vacation in early 2025.
Right.
This forecast might make you want to rethink your budget a bit.
Because if the euro drops, like Halpenny says,
Yeah.
your dollars are going to go a lot further.
Exactly.
Talking about big savings on, flights, hotels.
Mhm. Even souvenirs
Oh, yeah.
could really make a difference.
But timing is everything.
It is.
If you're flexible with your travel dates, it might be worth waiting a little bit.
See how things play out.
Right. But there's always a chance the euro could rebound sooner than we think.
That's true.
Oh.
It's a gamble.
It is a bit of a gamble.
Now, what about investments?
Okay.
Anyone out there holding euro-denominated assets?
Right.
This forecast might make you a little nervous.
Understandably.
Yeah.
But it's important not to panic. The
Right.
first step is, assess your whole portfolio.
And your risk tolerance.
How much exposure do you have to the euro?
Exactly. Are you okay with riding out some volatility?
Yeah.
Or do you need to, rebalance things?
Because if you're in it for the long haul,
Right.
a short-term dip might not be a big deal.
Exactly.
But, if you're closer to retirement
Yeah.
or you have specific financial goals, you might need to change your strategy.
You might have to.
And diversification is key.
Always.
Don't put all your eggs in one basket, right?
Never a good idea.
Okay, so we've talked travel, we've talked investments, but there's one more thing I think is super important for everyone listening.
What's that?
We keep saying stay informed,
Yeah.
but how do you actually do that
That's a good question.
without it becoming completely overwhelming?
It's easy to get lost in all the information out there.
Right.
I think a little effort goes a long way.
Okay.
Start by finding some good sources you trust.
Okay.
There are great websites, blogs, even podcasts that give you updates and analysis on the currency markets.
And those economic calendars
Oh, yeah, those are really helpful.
can really help you stay ahead of things.
Exactly, by keeping an eye on these resources and just getting a basic understanding of how economic indicators affect currencies.
Right.
You can make better decisions.
So as we wrap up this deep dive,
Yeah.
I want to leave everyone with one final thought.
Okay.
We've talked a lot about data expert opinions,
Right.
but there's something else that often gets ignored.
What's that?
Market psychology.
The human factor.
Exactly.
Fear, greed, speculation,
Yeah.
emotions can really drive the markets in some crazy ways.
A sudden shift in sentiment, maybe from a news headline or something trending on social
It
media.
happens all the time.
Yeah, it can create these self-fulfilling prophecies.
Right. And suddenly currencies are moving in ways that make no sense.
It's a reminder that these markets are complex,
They are.
influenced by so many different factors.
Yeah. Both rational and irrational.
Which I guess is what makes it so interesting.
It does.
It's a constant learning process.
Absolutely.
The more we understand these forces at play,
Mhm.
the better we can handle the ups and downs.
Well said.
So stay curious, everyone.
Stay informed.
And don't forget the power of human psychology.
Yeah, it's a powerful. We're going to be talking about the Bank of
And
England.
on that note,
What they're doing.
that's a wrap for
and,
this deep
and maybe
dive.
more importantly,
It is.
what
Until
they might
next
be doing
time,
next year
happy
with interest
exploring.
rates in 2025.
Yeah, it's like the Bank of England is trying to send us a message, but it's like written in a different language or something. It's not quite clear what they're trying to tell us. The markets are saying one thing, but the bank might be thinking something else.
Yeah, and the thing is, they just decided to keep the bank rate right where it is at 4.75%. And, at first glance, you might think, oh, well, that's not very exciting, is it? But the markets were actually expecting maybe like 2 rate cuts next year. And then the Bank of England governor, Andrew Bailey, kind of threw everyone a curveball. He came out and said that maybe 4 quarter-point cuts in 2025 might be more appropriate. It's like, well, hold on a second. What's going on here?
Oh, right. Yeah, it seems like everyone's on a different page. And then to make things even more interesting, it looks like 3 members of the Monetary Policy Committee actually voted against keeping the rates the same. They actually wanted to cut rates right now.
3 of them, huh? So who are these 3 and what's their deal?
Well, you got Dingra, Ramsden, and Taylor. Ramsden has been pretty vocal for a while now, saying that he wants to cut rates. He thinks the economy needs a little help and that cutting rates is the way to do it. Dingra is more worried about how high inflation is hurting people, especially those who don't have a lot of money. She thinks that cutting rates could give some people a break. And Taylor, well, he's got a slightly different angle. He's more focused on the possibility that the economy might slow down, and he sees cutting rates as a way to kind of give things a little push and keep things moving. But the fact that all 3 of them disagreed with the decision to keep rates steady, well, that tells you that there's some real debate going on inside the MPC about what the best move is.
Okay, so it's like got this kind of internal battle going on at the Bank of England. You got the folks who are saying, hey, let's be careful and take it slow. And then you got others who are saying, no, we need to do something now. And it kind of makes you wonder who's got the right idea. Are they being too cautious, or are the ones who want to cut rates jumping the gun?
That's a great question. And to try and answer that, the article we're looking at brings in a few experts. They try to weigh in on this whole debate, like Stefan Koopman from Rabobank. He thinks the markets are totally off base. He thinks the MPC is actually getting ready to cut rates way faster than anyone is expecting.
So he's on the side of let's cut them faster, huh?
Exactly. And he's not the only one. Konstantinos Venetis from TS Lombard seems to agree with him. He's even using phrases like deeper rate cutting cycle, which makes you think that maybe this is going to be a bigger change than we thought at first.
Okay, so faster and deeper cuts. Got it.
Yeah.
But here's the thing I'm wondering about. When are these cuts going to happen? Are we talking about a big sudden change or more of a gradual thing?
Yeah, that's where it gets even more interesting. Sanjay Raja, he's a UK economist at Deutsche Bank. Well, he's also predicting 4 cuts next year, but he thinks they'll mostly happen in the second half of the year, kind of like waiting till the end to make the big move.
So a backloaded approach. That's like waiting for the perfect moment. Right? But why wait?
Well, he thinks the Bank of England is playing it smart. Like they're saying, let's just see how things go and then we'll make a move. They're waiting for certain signs from the economy before they really start cutting rates.
Okay, that makes sense. So what are these signs that they're looking for? What's going to tell them that it's time to start chopping those rates?
Well, Raja specifically mentions things like unemployment going up over 4 or 5%, and wage settlements cooling down, meaning that wages aren't growing as fast anymore. And services inflation coming down too. It's almost like they have this checklist, and once they check off all the boxes, then they'll feel good about cutting rates faster.
So it sounds like a slow start to the year, and then maybe things pick up speed in the second half. But it's not just about the timing, is it? It feels like they're trying to do two things at once. They want to help the economy grow, but they also don't want to mess things up. It's kind of like they're walking a tightrope.
Yeah, exactly. It's a tough balancing act for sure. On one hand, they want to loosen things up a bit and give the economy a little boost, but they're also worried about spooking the markets or accidentally causing problems. It's like trying to steer a giant ship. You can't just make sudden turns. You got to be careful and make changes gradually.
It's funny you should say that because I was just thinking about how this affects us. Regular people just trying to manage their money. I mean, we're not the ones setting interest rates. But all these decisions from the Bank of England can have a real impact on us, like our mortgages, our investments, all that stuff.
Oh, absolutely. And that's why it's so important to understand what these potential rate cuts could mean for you and your finances.
Okay, so let's get practical here. If the Bank of England does decide to speed things up in the second half of 2025, what could happen? What should we be watching out for?
Well, one thing that could see some big changes is the housing market. Lower interest rates usually make mortgages easier to afford, and that can lead to more people wanting to buy houses, which could push prices up. So if you're thinking about buying a home, these rate cuts could be a big deal.
But hold on, wouldn't that also mean that housing could become even less affordable for some people? Like the ones who are already having trouble getting into the market. Wouldn't that just make the gap between homeowners and renters even bigger?
Yeah, that's a good point. It's kind of a two-sided coin.
It could help some people get into the market, but it could also make things harder for others.
And we might even see people start buying houses just to try and make money quickly, which could create a bubble that eventually bursts. Definitely something to keep an eye on.
Okay, so good news for some buyers, maybe not so good for others. Sounds like a mixed bag for the housing market. What about investments? How could these rate cuts affect things like stocks and bonds?
Well, historically, when interest rates go down, stocks tend to look more appealing to investors. That's because when rates are low, investors start looking for other places to get higher returns, and the stock market often seems like a good option. So we might see certain sectors do really well after these cuts, especially the ones that are sensitive to changes in interest rates.
So does that mean people should start moving their investments around?
Well, it's not quite that simple. Remember, investing always has risks. And we got to keep in mind that the Bank of England is making these decisions based on what they think is best for the UK economy. But that's just one part of the whole picture. Things happening around the world, unexpected events, all sorts of stuff can throw things off.
Right, it's like trying to predict the weather. You can look at the forecast, but you never know when a storm might pop up.
Exactly. So yeah, while these potential rate cuts might create some good opportunities, it's super important to stay informed, do your research, and understand the risks. Don't just jump into anything without thinking it through just because you hear interest rates might be going down.
So stay alert, do your homework, and don't put all your eggs in one basket.
Got it.
But sometimes I think we get so caught up in all the numbers and predictions that we forget about the people involved. These economic decisions have real impacts on people's lives, on their hopes, their worries, their ability to just make ends meet.
You're absolutely right. And that's what makes this whole discussion so interesting and honestly a little bit scary too. We're talking about real people's livelihoods here.
I mean, imagine you're a young couple trying to save up for down payment on your first house. These rate cuts could be amazing, or they could be a total disaster. It all depends on how the market reacts. Or think about someone who's close to retirement and counting on their investments to give them a steady income. These changes could have a huge impact on their financial security.
Yeah, that's a really important point. It reminds us that this isn't just about abstract economic ideas. These decisions have real consequences for people and families all over the UK.
Exactly. So as we're trying to figure out this whole economic situation, it's important to remember that there are real people behind all these numbers. Their stories, their hopes, their struggles, they're all connected to these economic forces. And even though we can't predict the future for sure, we can at least try to understand what might happen because of these decisions, and then make smart choices that work for us and our goals.
It's kind of like trying to walk that fine line, you know? Keep everyone happy, but not make any sudden moves.
Yeah, it makes you think about how all of this connects back to us. Regular folks trying to manage our own money. We're not setting interest rates or anything. But these decisions from the Bank of England, they can really affect us. Everything from our mortgages to our investments.
Absolutely. And that's why it's important to try and understand what these potential rate cuts could actually mean for your own personal finances.
Okay, so let's get down to it. If the Bank of England does decide to speed things up with those cuts later in 2025, what could happen? What should we be looking out for?
Well, one area that could see a lot of action is the housing market. Usually, when interest rates go down, mortgages get a little easier to afford. And that can lead to more people wanting to buy houses, which could push prices up. So, if you're thinking about buying a home, these rate cuts could be pretty important.
But wait a minute, wouldn't that also mean that housing could actually become less affordable for some people? Especially those who are already struggling to get into the market. Wouldn't it just make that gap between homeowners and renters even wider?
Yeah, that's a valid point. It's kind of a double-edged sword, you know? Lower rates could help some folks get into the market, but it could also make it even tougher for others. And we could even see people start buying up houses just to try and make a quick profit. That could create a bubble, and we all know what happens when bubbles burst. Definitely something to pay attention to.
Okay, so good news for some buyers, maybe not so good for others. Kind of sounds like the housing market could be a bit of a roller coaster. Now, what about investments? How could these rate cuts affect things like stocks and bonds?
Well, historically, when interest rates go down, stocks tend to become more attractive. Investors start looking for places to get better returns, and the stock market often seems like a good bet. So we might see certain sectors do particularly well after these cuts, especially the ones that are really sensitive to changes in interest rates.
So is this a sign that people should be thinking about changing their investments?
Well, hold on a sec. It's not that simple. Gotta remember that investing always comes with some risk, and the Bank of England is making these decisions based on their view of the UK economy. But that's just one piece of the puzzle. There are things happening all over the world. Unexpected events could pop up and throw things off.
Right, it's like trying to predict the weather. You can check the forecast, but you never really know when a storm might roll in.
Exactly. So while these rate cuts could create some good opportunities, it's really important to stay informed. Do your research and understand the risks involved. Don't just jump into anything without thinking it through, just because you hear that interest rates might be going down.
Okay, so stay informed, do your homework, and don't put all your eggs in one basket.
Oh.
Got it. But sometimes I feel like we get so focused on all the numbers and forecasts that we forget about the human side of things. These economic decisions have real consequences for people on their hopes, their anxieties, their ability to simply get by.
You're absolutely right. It's what makes this whole topic so fascinating and honestly a little bit unnerving too. We're talking about people's lives here.
I mean, imagine you're a young couple trying to save up enough money for a down payment on a house. These rate cuts could be a huge help, or they could really throw a wrench in your plans. It all depends on how the market reacts. Or think about someone getting close to retirement relying on their investments to provide a steady income. These changes could have a big impact on their financial security.
That's such an important point. It reminds us that these aren't just abstract economic theories. These decisions have tangible consequences for real people and families all across the UK.
Absolutely. So as we try to make sense of this complex economic situation, it's crucial to remember that there are real people behind all the numbers. Their stories, their hopes, their struggles, they're all interwoven with these economic forces. And while we can't predict the future with absolute certainty, we can at least try to understand the potential consequences of these decisions and make informed choices that align with our own values and goals.
Yeah, it really makes you think, doesn't it? It's like we've got this puzzle with all these moving parts. The Bank of England's trying to find that sweet spot between boosting the economy and keeping things stable. Experts are making predictions that could send the housing market through the roof or leave some buyers high and dry. And then there's all of us just trying to figure out how to manage our money with all this uncertainty going on.
It's definitely a complex situation, but that's why we're here, right? To try and shed some light on things and help you, the listener, make smarter decisions. Exactly. So as we wrap things up, is there one key takeaway that you want our listeners to remember? What's the one thing they should keep in mind as they try to navigate all of this?
Well, I think the most important thing is that this situation is always changing. The Bank of England has given us an idea of what they might do, but things could easily change. The market might be underestimating how quickly and drastically the bank might act, and that could have a big impact on everyone.
So it's not just about whether they'll cut rates, it's also about how fast they'll do it and by how much.
Exactly. And those factors could ripple out and affect all sorts of things, from house prices to how people invest their money. It's like a chain reaction, one move leads to another. But it's important to remember that nothing is set in stone. There are lots of things that could happen and things can change quickly.
So we're talking about possibilities, not guarantees.
Right.
So what would you say to our listeners? How can they stay ahead of the game and make sure they're ready for whatever comes next?
Well, first of all, stay curious. Keep an eye on those economic indicators we talked about, like unemployment wages and inflation. Those are the things that will give you clues about what the Bank of England might do next. And don't just rely on headlines, dig a little deeper. Try to understand why these decisions are being made.
It's like being an economic detective, looking for those little clues that tell you what's really going on.
Precisely. And maybe most importantly, think about how these potential changes could create opportunities or risks for your own personal finances. Are you thinking about buying a house in the next year or two? Are you investing for retirement? The decisions the Bank of England makes could have a real impact on your goals. So take some time to consider how these changes might affect you personally and adjust your plans if you need to.
It's all about being proactive, taking control of your financial future instead of just reacting to whatever happens.
That's the idea. Knowledge is power. The more you understand about these economic forces, the better equipped you'll be to make informed decisions that work for you.
Well said. This has been a really insightful deep dive. Thanks so much for helping us navigate these choppy economic waters.
It's been my pleasure. I always enjoy exploring these topics, and I applaud our listeners for taking the time to stay informed.
And to our listeners, we encourage you to stay tuned for future deep dives as this story continues to unfold. The economic landscape is always changing, and we'll be here to help you navigate it every step of the way. Until next time, stay curious, stay informed, and stay ahead of the curve.
Should I be about the incoming Trump administration about that process?
So I think it really depends what your approach to green energy is. I don't think the Trump administration is looking to say roll back the entire IRA. I mean, this is an administration that really also has a vested interest, really wants to say to increase the domestic lithium and lithium battery supply chain in the United States. They may have a slightly different reason for wanting this. They consider it more of a national security concern than, say, an imperative to put more EVs on the road. But this is an area where they definitely will have a lot of support there. And I think that there are a lot of areas where they can work together. Now, if you're looking at, say, offshore wind, I don't think you're going to see a whole lot of support from the Trump administration. But to be totally honest, the offshore wind industry in the United States has got a lot of headwinds, even, without President Trump kind of putting the brakes on that. They've got issues in terms of the turbines that they're using, collapses in the Atlantic, problems with funding for projects, off of New York and New Jersey. The Trump administration is a convenient way to excuse, perhaps, a lack of interest and difficulty getting it going. But I wouldn't say it's necessarily the Trump administration's fault that offshore wind is having a really difficult and slow start here.
Ellen, what about nuclear?
Yes.
That is an excellent question, and I think that is something that the Trump administration could really make a mark on in energy if they choose to address this, because I know you said on the previous segment about data centers and these big tech companies, they want to use nuclear to power their data centers. They realize that, look, we've got to get something that's more reliable. We can't use wind and solar for this. So it's either natural gas or nuclear or a combination. And that is an area that the Trump administration could really push things forward. We've got a lot of really interesting technology in terms of small modular reactors coming up. And this is an area where they could really push things forward and help bring more safer, better, more affordable nuclear technology to the United States. We really haven't had a new nuclear plant. It is incredibly difficult to build a new nuclear plant. But nuclear is a stable, great baseload source of energy that is actually incredibly safe. And so there's a lot of things that they could do to help push that along, bring that to fruition in safe ways that would really also help the environment and lower emissions.
All right, Ellen, thank you so much. We appreciate that. Ellen Wald, Atlantic Council Senior Fellow and author of the book Saudi Inc., so one of our go-to voices on energy. And Caroline, I was on holiday through Ireland this past September, and there are windmills everywhere. Mm-hmm. I don't know how I think about that. I mean, beautiful Irish countryside, then you got these big windmills. Now, if they're producing a ton of energy, I guess maybe it's worth it. I don't know.
Same in the north of England, same as offshore in the UK.
Yep.
And Europe, of course, has been far more promotable of clean energy and sources and use cases and have financed clean tech far more than the United States perhaps has, and that shift changing. But we'll see how resilient they ultimately end up being and how resilient the overall electricity grid remains in the UK and across Europe. But yeah, for some it's an eyesore, for some it's particularly beautiful. But just that ongoing dynamic. I do wonder how much we'll see a shift into nuclear coming up.
Yeah, and some of the folks who are a little bit more cautious about green energy said, the amount of fossil fuels that were burned to construct these windmills will never be paid back in their 20-year life. So there's two sides to that story, I guess. So we'll keep an eye on that. S&P 500, we're off 1.2%. The NASDAQ off 1.9%. We're going to have more coming up. This is Bloomberg.
There is no backwards in recycling. There is no backwards in treating pollutants in the water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services even in time of crisis, as well as to see the long term and deliver good result, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
We welcome you back to a simulcast radio and TV audiences. We go worldwide. I'm sat here in London, Caroline Hyde, and Paul Sweeney over there in New York. And we are looking at a risk-off day, Paul, really starting to see at the bottom the NASDAQ 100 coming off of its lows of sub 2%. But as you noted, volume's actually higher, 30% higher than the last average of the 20 previous trading days. So clearly people trying to tie up their books as we end the year out, and money coming off the table. NVIDIA, a key name that's lower.
Yeah, absolutely. So again, I think we're seeing some names kind of move around here. Generally, when you look at the S&P and the Dow, the volume's a little bit lighter, but a little bit higher there in NASDAQ as we see some big moves there. 2024 turned out to be a pretty good year for global Wall Street. We're talking about bonuses being higher and all that kind of good stuff. But of course, when you listen to some of the Wall Street folks talk, they're saying 2025 with this new Trump administration might be even better. JP Morgan CEO Jamie Dimon, he sees companies pursuing more M&A in the upcoming Trump administration. He spoke with Bloomberg's Lisa Abramowitz. Let's take a listen.
Because they have the Senate, the House, and the presidency, they have far more ability to do things like that. I think last time around, President Trump had started by saying for every new regulation, 1 in, 2 out. And I think later I said 1 in, 5 out. I think they're going to do some of that again. I think it will, the banking industry, whether you voted for Trump or Joe Biden, a lot of bankers, they're like dancing in the street because, they've had successive years and years of regulations, a lot of which stymied credit. And so and you could have kept the banks equally safe, but had them do more credit. And so, to just give you an example, the average bank in America, I think the number used to have $100 of deposits and $100 of loans, and now it's $100 of deposits and $65 of loans. And if that's what you want, if for some reason the regulators think they're geniuses, that's the best way to run the banking system, so be it. But I think they did a lot of things that ended in that answer, but they didn't know that was going to be the outcome. So, and I think you could talk to any industry, and they'll give you examples of regulations that could be reduced that make it easier for them to do business while keeping the country safe, while keeping the air clean, while making sure the EPA does its job, et cetera. So I applaud them. They should be looking at those things.
Do you think if there is, particularly in the banking sector, less regulation, that there will be an even steeper competition with banks getting back some of the business from private investment firms?
Probably, yeah. I mean, because if you look at, you're asking about private credit and private investment, which I'm not against, and it has grown very rapidly, and it's got pros and cons. I'm always in favor of competition, but part of the reason that they are dancing in the street, which they said publicly, they used to get mad at me, now they say, no, he's right, is half the capital. No social requirements, no AML, no BSA, no fiduciary, no reporting to the government, no insurance, no liquidity. Yeah, it's a huge disadvantage. So yeah, I think it'll make banks get back some of that business. I think it'll be more important to regional banks than to JP Morgan.
There's also a question, whether it's banking mergers and acquisitions or just more broadly, whether there's going to be a more amenable administration to tie-ups. Are you seeing from your conversations in the past 7 days with companies that they are looking to expand their M&A pipeline to start putting that together?
Yeah, so absolutely. I mean, a lot of M&A was stymied by the fact it's not just sometimes you can't get through the courts or something like that, but it takes 2 years. It takes 3 years. So make believe you're a bank, and we've seen this happen. And one of these deals actually took 3 years. It takes 3 years to get it done. So you've done a deal. It's binding. You haven't closed it, but now you've got to run the company. You can't get the synergies. You're going to be losing people. You want to start working a common culture and common technology. You can't do it. So yeah, a lot of companies are looking at will be looking much more aggressively at acquisitions and deployment of capital, and they should.
CEO JP Morgan, Jamie Dimon, speaking with our own Lisa Abramowitz in Peru a little earlier in the year. But let's just talk more about the M&A outlook, whether we're going to see it take off in 2025. Mike Hyther's with us of Bloomberg News, sat over on the West Coast. And Mike, just put the context. How did 2024 end up looking for M&A? Which industries in particular? Where are the biggest deals?
It was pretty good, actually. There was a lot going on. There was a lot of cross-sector deals being done. The actual totals were up back to about 3.1 trillion plus globally. That was a slight uptick from the previous year. Keep in mind, that's still down from about 5.3 trillion in 2021, which was the peak for just about everything at this point.
Hey, Mike, so, as Jamie Dimon was just saying, the expectations are pretty darn optimistic for 2025 with the new administration, maybe regulatory perspective, lower tax rates, maybe lower cost of capital, all those things kind of put together. What are your sources telling you about 2025?
It's looking good. I think that he's absolutely right, of course, and the dancing in the streets comment is just hard for any journalist to resist repeating 5 times. The just classic traditional Republican administration coming in with a less regulatory bent, and in this case actually reversing regulations, is a huge incentive that can't be underestimated. There's another flip side of that too, is that of course the uncertainty generated by Donald Trump, quite frankly in particular, is on the flip side of it a consideration as well. Interest rates have come down. That's going to, of course, be a huge incentive for getting deals done now. The uncertainty generated over just something as simple as, not as simple, but as far-reaching as tariffs. If a threat of a 25% tariff on Mexico and Canada comes in, that's already having a huge effect in the market attitude, as we described in one Bloomberg story. A global supply chain freakout is underway right now. So there's always going to be the question of what is actually going to happen. I think the biggest factor is the most obvious one, is that the antitrust regime is completely changed. Lena Khan being replaced by her fellow commissioner Andrew Ferguson, who comes in, and he's somebody who has opposed many of her rulemaking aspects, and a lot of the deals that, for example, Albertsons, Kroger's just got blocked this month. That's the kind of deal that might just sail through just fine in the next administration.
But then Gail Slater and the DOJ side of things, what are we anticipating for big tech being able to make M&A deals, being able to remain as they fully are formed, whether they have to start to be broken up? I mean, everyone's still wondering about Alphabet.
Oh, yes. I think that's the tech is the wild card here. Certainly, if you are, for example, an energy company looking to export more oil, natural gas, whatever, you're going to have a pretty clear path to do a lot of the things you want to do in terms of M&A. There's not going to be resistance. For all of the Republican tendency to allow business to do what business will do, more so than Democrats, for tech, obviously Donald Trump in particular and others, including J.D. Vance, by the way, have come around and said that tech is a problem. I think it's going to be a little bit less predictable, and there might be some favorites, there might be some not so favorites that get things done.
Hey, Mike, how about the IPO market? That's another big moneymaker for global Wall Street. It's been a little bit thin. The activity's been below what I would have expected, given that the S&P's been up more than 50% over the past couple of years. Back in the day, I would have gotten a bunch more deals out, I feel like. But what are they saying about the IPO market in 2025?
I've got a colleague who routinely taunts me about saying, is the IPO window open yet? on a weekly basis. And I think it actually is opening finally. Like everything else, like once again, IPOs and M&A, the peak was 2021. There was $669 billion raised in IPOs that year globally.
Yep.
It's now, last year was up a bit modest from the year before, $144 billion. And that's an improvement. But I think the real thing to watch for is that there was consistency. The 2023, there was a point where there was companies like ARM and Birkenstock going public, and it was like, hey, was this going to be the start of new things again? And Birkenstock and flop in a headline worked quite well. The IPO just did not go as expected. And a whole line of companies that had been planning to go public sort of put their plans on hold. This year, things are looking pretty good. There's some big names coming up. Klarna is one, Chime is another, a lot of the fintech, some of the venture-backed spaces. One company that I think is a real bellwether is not necessarily one that's a household name or anything, but Service Titan filed last week for an IPO, and they're looking at a good-sized IPO, it appears. They are a kind of company that's venture-backed, but it also has its hand in sort of home repair and construction, real nuts and bolts kind of
Mike. And we spoke actually to the founders of that company on the day that they listed, and over at the NASDAQ, it went incredibly well, maybe a bit too well in terms of how much it managed to sail through its price. Mike Hyther, we thank you so much. We're going to be digging into these markets a little bit more. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
Bringing you up-to-the-minute global economic news from around the world whenever and wherever it happens. I'm Oliver Crook at the European Commission in Brussels, and this is Bloomberg.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ही बुरा हो जाएगा।
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
Names that move markets are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg.
All right, I'm Paul Sweeney in New York City. Caroline Hyde, she's in London. This is a special edition of Bloomberg Markets. We are simulcasting on both Bloomberg Radio and television. Let's get a look at this market. We are selling off here today, although we are off the lows here. S&P 500 off about 1.2%. The NASDAQ got a lot of those tech names in there, of course, down 1.8%. And if you look at what's taking the NASDAQ down, the top five contributors to that point decline are NVIDIA, Microsoft, Apple, Amazon, and Tesla, the names you'd expect. Each of those names down between 2 and 4%. So that's what we're seeing in the NASDAQ. 10-year Treasury yields steady, 4.58% on your 10-year. WTI crude oil up slightly, just above $70 per ounce there. So we got a little bit of a sell-off. We'll stay on top of that for you. Let's go to self-driving cars. Why not? China's self-driving firm Pony AI is looking beyond the U.S. to avoid tensions. CEO James Peng spoke with Bloomberg about the growth of his company and the impact of U.S. sanctions against chip makers in China. Let's take a listen.
In terms of the sanctions on the chips, actually for us, it's nothing new. We have dealt with this for quite some time already. So for our strategy was and remains to be that we will diversify our supply chain. And I think as the more and more manufacturing of the chips coming out from either in China or rest of the world, we'll try to have more diversified supply chain to further de-risk our exposure to the geopolitical tensions.
Hi, James. This is Steve Engel here. We met, I believe, at the Beijing Auto Show earlier this year. And I did take a ride in one of your LiDAR and Pony AI-equipped Toyota robocabs in Beijing. I do understand that, you're a company that had some robo trials in the Bay Area, but also in multiple cities in China. So you kind of have, influence in both the United States and China, obviously. But what was the main questions as you took your company public in New York? What was the main concerns, if you will, of potential investors when you went on that roadshow in the United States with increased geopolitical tensions?
Surprising, actually, the geopolitical tension questions wasn't at the front and center of the investors, but rather the investors actually more focused on the economical side of the robotaxi. People are really interested to figuring out when will be a time for the robotaxi to be actually large-scaled, deployed, and be profitable. So I think the good news is that people really believing that 0 to 1 has already finished, and now it's the time for the autonomous driving companies to really go to the large-scale commercialization.
What does that look like exactly, James? Because right now you're operational in 4 of the top or tier 1 cities, but what does that actually look like, say, over the coming 1 to 2 years? I know that you're going to continue to focus your efforts primarily in China, but talk to us about the competitive pressures that you face there as well.
Yes, especially if you're talking about the next 2 years, our main focus will be on the tier 1 cities of China, and actually just this year we also signed a deal with Beijing Auto and Guangzhou Auto to mass produce autonomous driving vehicles. So that means in the next 2 years we'll have at least 3 models coming out of the assembly line will be launched into the tier 1 cities in China. So I think with the support of further support of the regulations, and the residents actually get more familiar with our services, I think we'll have a much larger fleet, have a bigger coverage, and hopefully we'll be able to actually have a much larger scale commercialization.
James Peng, CEO of Pony AI, that recently listed here in the United States, or at least as I sit in London, where Paul Sweeney is sat over in the United States. But interesting how they dovetail the US and China future relationship there with technological innovation. Let's talk exactly that, how geopolitics can affect innovation and what else we've got to look out for in 2025. Pleased to say joining us now is Managing Director and Senior Fellow of GMF's Technology Program, Lindsay Gorman. Lindsay previously served in the Biden White House, in fact, as a Senior Advisor on Emerging Technology, National Security and Democracy Issues. Exactly the sort of conversation we need to be pushing forward. Let's just go first of all to China-US. And for me, I'm all eyes on what happens not on January 20th, but on January 19th. TikTok, whether or not we indeed will see a ban on TikTok. It's in the hands of the Supreme Court at the moment, and that's likely to be coming out, I think, around January the 10th. Lindsay, push us forward for a moment.
Absolutely, and I think this TikTok test really will be a litmus test of how the next administration is going to handle these geopolitical issues around China and technology competition. We're in an era where the United States, China, Europe are all racing to develop and lead in the next generation of technologies, AI, quantum information, biotechnologies. These countries have decided these technologies are going to determine the future of who leads in world affairs. And we have an incoming administration, and with its fate that will be facing really this first test on the question of TikTok. Now, Congress passed a law with overwhelming bipartisan support that would require TikTok to divest from its parent company, which is based in China, ByteDance, or face a ban, a de facto ban in the United States. And that deadline, as you mentioned, is January 19th. If TikTok does not find a new owner by January 19th, the law in effect that the president signed that received all the support on Capitol Hill would say that the app stores are no longer allowed to carry TikTok. Now, there have been so many legal disputes and so many attempts to ban TikTok in the past. This is really the first piece of legislation that's stood up to a court challenge, which happened just in the last month. And now TikTok is taking that challenge to the Supreme Court. As you mentioned, that will be in early January. Even if the law survives that challenge, though, there is this question of what an incoming Trump administration will do. He has said on the campaign trail that he will, quote, save TikTok. This is also former President Trump was also trying to ban TikTok himself during his first administration. So I think we don't really know what's going to happen come not only January 19th, but also January 20th, if the incoming president decides that he doesn't want to enforce the law. Will TikTok be banned on app stores? Will there be a buyer?
Hey, Lindsay, let's step back and just think about what a Trump presidency could mean, just in terms of technology policy writ large. And when we think about that, I think I have to ask you about Elon Musk. I would think if there's one area where he would like to have some influence, it would be in technology policy. How do you guys game that out?
Absolutely. And I think, we don't have to do too much scenario planning because we're already seeing it in action. First of all, I think everything is pointing to an era of deregulation. Trump has said he wants to focus on AI, which is consistent with the Biden administration's approach, but also crypto is going to be back in town in DC. Trump has said he wants to make the United States the crypto capital of the planet. So that's going to get more of a boost in addition to AI. And yes, this question of Elon Musk, the bro in chief, the bro oligarchy, whatever you want to call it, we've already seen his influence. Just by virtue of Elon Musk posting on X earlier this month, it almost led directly to a government shutdown over how the government was going to be funded. Congress had a bill planned to fund the government. Elon started posting on X, and it almost led to a shutdown. But I think what's really important, eventually they got a deal, but what's really important is in that deal, actually one of the provisions that was stripped out of the original spending bill that Congress was going to pass related specifically to technology investments in China. There was a provision in that original bill that said, let's place some restrictions on American investors in these really high-tech industries, AI, quantum information, semiconductors that are going to fuel future competitiveness. Now, as we know, Elon Musk and a number of other business executives do have ties to China. That's something that's very difficult to disentangle and that the United States is going through right now. So I think this CEO, this kind of supranational tech billionaire in Elon Musk, having this outsized political influence really does raise questions and conflicts when it comes to U.S. national security interests and how our technology competitiveness plays into that.
Speak to the future of generative AI and regulations there, because, again, it's very murky to understand perhaps which side Elon Musk will come down on. We know that he's busy taking legal action against OpenAI. He doesn't want them to be changing their for-profit structure, and that's something that we have news on today. We also know that he has been someone who's been speaking out about worries of the pace of generative AI and what that would mean for the future of humanity if it isn't regulated or some sort of safety curbs are put in place. But he's also got XAI, which he's trying to grow at full throttle. So where does you come out on thinking his view on generative AI and the future of regulation there?
Yeah, well, it's so hard to figure out day to day. It truly is. And everyone has a dog in this fight. Just in the last month, we've seen developments come from OpenAI with their new O1 model. Google has put forward this Gemini 2.0 model. So the race is really on. As you mentioned, Elon Musk himself has the Grok platform that's coming out now with AI image generators based on that. So I think the name of the game, though, is very much going to be innovation at almost all costs. That no one really wants to slow down the pace of innovations is such that the United States would not lead in it. But I think really where the debate will be is, are there going to be guardrails, or are those guardrails going to come too little too late? Now, the U.S. AI Safety Institute that was established by the AI executive order is now reviewing these models. They put out their first review, a technical review of OpenAI's O1 model. And it was assessing things like, is this actually doing what it says it's going to do? Because if you're going to use these models and these AI systems in large-scale consequential decisions, making loan decisions in financial markets, medical devices, medical inputs, and our healthcare system, you don't want to get this wrong. And right now, as we know, AI hallucinates, it gets a lot wrong, it's not always right all the time. And so that's where a lot of regulatory conversation is. So I think the question really is guardrails or no guardrails. And we have a lot of parties who want to run ahead.
Lindsay, 30 seconds. Is there any way to avoid a technology Cold War between China and the West? It seems like we're in the early innings of that.
I think it's not a Cold War because we're very connected with China in a way that we aren't. We never were with Russia. But I would just say that it's not only the U.S. making the decisions here, and China itself has tried to create a push for its own supremacy as well.
Lindsay, so good having you. Lindsay Gorman, GMF's technology program We appreciate the insights as we push towards 2025. We look at what's happening with tech right here, right now, and look, it's under pressure in terms of selling pressure on the markets. Look, 1.4% lower, 1.9% if you're looking at the NASDAQ 100. In large part, this is thanks to one of the biggest sell-offs we've seen in NVIDIA, for example, since November the 25th, Paul. We're clearly seeing some profit-taking on some of the standout names.
Yeah, and a little bit higher volume as well on the NASDAQ. That gets your attention on when the rest of the market, we're seeing some lower volume here. So, again, the S&P, and it's led by the big tech names that it kind of led you on the way up. You know, you think about the NVIDIAs, the Teslas, the Amazons, and the Microsofts of the world, they kind of led you up. And on today, it's a day when they are leading you down. So we'll stay on top of that. The VIX here kind of blowing out. I'll call that out for Tom Keene. The VIX is up about 3.17.7 on your VIX. All right, coming up, we're going to talk holiday box office with Daniel Loria. He's editorial director at the Box Office Company. Pretty solid Thanksgiving box office, rolling into, I think, what most theater operators will tell you is a pretty good holiday season box office as well. Where are we relative to pre-pandemic levels? That's coming up.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry Yan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Bloomberg Markets. We are having a simulcast edition as we are in between those joyous times of festive holidays ahead of the new year. Paul Sweeney in New York, Caroline Hyde right here in London, and a market that is not looking too pretty. If you're looking at the NASDAQ 100 off by more than 2 percentage points on the day. We're looking at NASDAQ 100 and the NASDAQ benchmark more broadly off by 2%. We're looking at volumes actually higher for that particular tech-focused benchmark. S&P 500 off by 1.4%. Thinner volumes there were off by about a third compared to the last 20 trading days. Big names on the downside when you're looking at the points drags. It's the Magnificent Seven. It's NVIDIA, Tesla, Microsoft, Apple, Amazon, all pulling us lower. We see money moving out of bonds to those, so there's no particular area of safety today. Oil on the higher side. We're off by almost 3% for NVIDIA. Worst day since November the 25th. So clearly sentiment just feeling a little bit nervous as we head towards close of play here in Europe, actually, though. Europe did manage to trade a little bit higher, Paul.
Yeah, very interesting to see here. I saw that, you guys are doing better over there after the Boxing Day. So again, as Caroline was just mentioning, got a little bit of a sell-off here. Let's go to one of the big businesses out there, particularly this time of year, and that's the movie business. When you think about the movie business, the summer's the big part of the season. That's where a lot of the big movies are released, and that's where the box office is. But the second big driver is kind of this holiday season we're in right now. Joining us now is Daniel Loria, editorial director at the Box Office Company. They provide data and analytics on the global film industry. Dan, thanks for joining us. How has the 2024 box office been here in North America?
Oh, thanks for having me, Paul. It's been a recovery year. I think coming into this year, we all expected a downturn because of those actors and writer strikes from 2023, right? But we really saw a rally starting in June. So at the beginning of the year, we expected maybe a 10% slide. By now, we're expecting to finish the year within 5% year over year. So a big recovery to finish the year.
What has won out? Because of late, it's been, well, there's been something for everyone, really. You've had Gladiator 2, you've had Wicked, you've had the kids winning out with Moana 2 as well. Where have been the sweet spots?
Disney. It's that one word. And man, is it great to have them back. This is the first year since 2019 that Disney returns to $2 billion in domestic box office. And this is the first year, really, that we see them make the most out of that acquisition of 20th Century Fox a couple years back, if you remember. We didn't know what was going to happen with that. They have the Avatar movies, that's a guarantee. But this year, we saw new franchises revive, like Kingdom of the Planet of the Apes and Alien Romulus, to get back on the map. You see other divisions like Marvel with Deadpool and Wolverine, Walt Disney Studios Animation with Moana 2, and Pixar with Inside Out 2 having huge recoveries that they haven't seen yet since the pandemic.
So, Dan, you mentioned the writer strike, the actor strike. I'm hearing that 2025 and 2026 are going to be full production years, and it's going to be really big for the movie business. What's your expectation for the next year or two?
New benchmarks, especially in this post-pandemic era, right? So we are expecting the best year in the post-pandemic box office in the coming year, in 2025. We're right now forecasting between $9.3 and $9.7 billion domestically, around the $9.5 billion if you wanted to ask me for a sweet spot. And that's really coming from our forecasting analysts of experts in this industry that are giving us their own insights as to where things are going in 25.
Let's talk a little bit about the narratives within the companies themselves, because, look, you said the box office was difficult. We're also seeing a restructuring that continues to be very difficult. When you think about Paramount, how they're being bought at the moment, and really that's all about Hollywood and the box office. Where will we see M&A? Where will we see a refocusing coming from some of the big companies?
I think the key word here, Carolyn, for next year is spin-offs. And we're seeing that with all the TV businesses of these legacy media companies. We see Warner Brothers Discovery looking at how to spin off some of those cable properties. I know Comcast is looking at something similar. So in terms of how this impacts theatrical or the box office, I don't see an obvious answer yet. It's a market on the rise, granted, one that took a big hit during the pandemic. But you compare that to where linear television is right now, cable television is right now, that's a market in the decline. So I think the first point of focus right now is going to be the coming cable apocalypse that is going to be hitting the media sector next year.
Dan, talk to us about China as a market for U.S. films. As recently as 4 or 5 years ago, it was the growth driver, and almost as big as the U.S. North American box office. And you could not get a franchise film greenlit unless you knew it would play in China. Is that still the case, or is this kind of Cold War that's been growing over the last several years between the U.S. and China, has that dampened that market?
You know, I'm smiling, Paul, because 10 years ago, in my first appearance here, you asked me that very question. And my answer then is it's crucial, it's vital, right? I think that's changed. In the last 10 years, it's changed significantly because it's a lot harder making sure that China is a consistent player when it comes to release dates. Forget box office returns, just a simple release date. So it's not that, I think it's more of a high potential play rather than something that you can depend on. And right now where the market is, we need dependency.
What about the talent and the dependency that they're seeing ever more so on technology? And look, many took to the strike action because of a concern about generative AI and one's likeness in the future. But how is that shaping?
I think that's a great question, Carolyn, and that's exactly where we are with the AI question in Hollywood. Right now, it's a labor question. We're not to the point where it's a creative question yet. So as soon as we can figure out how the labor unions can embrace this or really live with it or coexist with it even, that's when we'll really be able to see how it looks like creatively. I've said this before, I think AI right now is a potential but not a reality in Hollywood.
Where are we in North American box office versus pre-pandemic level? Let's call it 2019? Because I think that was kind of the peak year, and then obviously very, very tough year in 2020, now trying to rebuild. Where are we, and when do you think we'll get back to that peak, that box office of 2019?
So that 2019 box office, and really those years in the latter half of the 2010s, was a benchmark of 11 billion domestically. Wow. I don't think we'll get there until 2027 at the earliest. Like I said, I think next year, 25, we're looking around 9.5 billion. I think the 10 billion benchmark is going to come in 26. And in 27, once we have a couple of years of a full movie slate from these studios, because as you mentioned earlier, Paul, it's really the first time since 2019 where Hollywood has an uninterrupted year of production. Now that we have these movies coming out and hitting theaters, I think we have to wait till 27 to get to that pre-pandemic level.
And are they all hitting theatres? How are we seeing Netflix in particular, or some of the key streamers, decide when to bring things out? I mean, Amazon made a bit of a U-turn on one of its key festive movies, and it looked like it worked to bring it out to the theatres.
Yeah, I think it's a case-by-case basis when we talk about the streamers. I don't expect Netflix to embrace theatrical anytime soon. Apple is still hot and cold on what their strategy is. We'll see how that's tested with a release like F1, the Formula One racing drama, coming out next summer. But then you have someone like Amazon MGM, which went forward with a release like Red One to theaters. That movie is going to make $100 million domestically, leading into a very profitable streaming run for that title. And they have some really, really interesting smaller movies in theaters right now. A movie like The Fire Inside, a biopic on the boxer Clarissa Shields, and my favorite film of the year, Nickel Boys. Two really great dramas that are going to be part of that awards conversation. It depends on the company, on what that strategy is, but it's definitely still evolving.
30 seconds left. Dan, the $1 billion box office, that's still out there, isn't it? You can still do boffo numbers, as Variety magazine would say.
Absolutely. I think it's the stat, something like 3 of the 7 highest grossing movies of all time came out after the pandemic. So on an individual title basis, if the movie's there, the public's going to follow, and they're going to follow to it in the theaters.
Daniel, so great catching up with you. Daniel Lauria, of course. What was your favorite movie again? Which one did you say we should watch?
Nickel Boys. It's out now and expanding soon from Amazon MGM. Great drama. Highly recommended.
Okay. Nickel Boys. Go watch it. He's, of course, at the box office company, doing all the data and analytics around the film industry. We appreciate him, editorial director there. Meanwhile, let's get a quick check on these markets once again, because Amazon, as we're talking in the movie business, doing pretty well, but from a stock perspective today, not so good. It's helping one of the key points drags on the NASDAQ 100. We're off by 1.8%. Volume's actually surging there, up about 30% compared to the last 20 trading days. Meanwhile, volume's thin on the S&P 500. The 10-year yield is flat. We're looking at oil just inching higher. And as we head towards the close here in Europe, we are holding on to gains. I mean, not so much in the UK. We're basically flat on the UK. But we did see about a 0.6% gain on the Euro Stoxx 50 as we close up the day of trade. From New York and London, we're going to have plenty more when it comes to these markets and when it comes to what you should expect for 2025. This is Bloomberg.
There is no backwards in recycling. There is no backwards in treating pollutants in the water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services even in time of crisis, as well as to see the long term and deliver good result, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
All right, good morning. We are here. I'm Paul Sweeney. I am in New York City, and Caroline Hyde is in London. Special edition of Bloomberg Markets. It's special because we're simulcasting on New York in radio and television. So how about that? Markets selling off here, as Caroline and I have been reporting this morning. Got the S&P off its low, off about 1.1% here today. The NASDAQ off about 1.7% here today. The 10-year Treasury, it's yielding 4.58% on year 10-year. On the commodity front, WTI crude oil up slightly, about $70.40 per barrel. Bitcoin off 1.2%, 94,500. So we got you all covered here. Let's talk about trading. Let's talk about electronic trading. Think about SoFi. Think about some of these online trading platforms. That is taking a bigger and bigger share of trading activity across a whole range of assets, classes, and our next guest is in that game. Interactive Brokers, we had some tape earlier of Interactive Brokers Chairman Thomas Pennerly. He spoke with Bloomberg earlier. Let's take a listen.
I'm afraid that the markets are becoming overextended and that, you know, sometime in the future we will have a downturn in the markets. But I don't think it's going to be a very violent and very far. It will not go very far. So I'm extremely optimistic about the next 4 years and maybe even thereafter.
The other thing where a lot of investors are expecting much lighter regulation is in the world of cryptocurrencies. How do you feel about cryptocurrencies from where you stand? And do you think that when your clients are going to Interactive Brokers, it's going to be something they're asking about more and more and more?
So cryptocurrencies are a very interesting area. We have been into cryptocurrencies for about 3 years. We charge less commission on a cryptocurrency trade than any other firm other than Robinhood, but Robinhood has a wider spread because they get their commissions paid by the market maker who they send their orders to. So I think on balance, our platform is probably the most efficient one for a crypto trader. Otherwise, I am, to tell you frankly, I am sort of scared of cryptos because, you know, they can go to any price because it's basically just a figment of imagination. So it doesn't have any underlying value. The only value it has is the same as the paper dollar, which is nothing.
But you've seen people pour in nonetheless through ETFs. You saw the price of Bitcoin get to $100,000. Will the investor of tomorrow be more likely to buy Bitcoin or a U.S. stock?
Well, it depends. Well, for a Bitcoin, you can buy U.S. stocks, right? For a U.S. stock, it's more difficult to buy Bitcoin, right? So I think that anybody who does not have Bitcoin should have some Bitcoin, but not too much. I would recommend that people put maybe their 2 to 3% of their net worth into Bitcoin. And we, for example, will not allow anyone to invest more than 10% of their assets into Bitcoin because I think that would be very dangerous.
Thomas Pettifee there, of course, chairman of Interactive Brokers. Let's keep this conversation going. Think about how, well, the maturation of the crypto ecosystem is being built into options trading, for example, and where else the retail investor can access these markets across the board. Perfect guest. We've got Stephen Sykes with us. He is COO at Public, which is a VC-backed investment platform. You're offering stocks, ETFs, options, crypto as well, and you're offering options on crypto. And I go there first, really, because, Stephen, what's 2025 going to look like in terms of the ability for retail and institutional players to see basically the institutionalization of crypto continue?
Yeah, well, thank you for having me, Caroline and Paul. It's great to be here, and it's tough to follow a legend like Thomas there, even the clip form. So I think as we think about crypto for 2025, I think it's going to be a continuation of what we've seen post-election. We've seen retail investors come to the market with a lot of heart to buy these assets, looking at sort of the opportunities going forward over the next 4 years as they see greater deregulation. And so, I think there's a lot of questions. I think Thomas raised some reasonable ones about where are the sort of valid use cases of crypto, how is that going to accrue to the platforms. But I think there's reasonable optimism that those use cases will emerge. I think one that we see our clients talking about and that we point to often in the space is just the continued growth of stable coins as a payment mechanism. Now people are like, okay, stable coins, if I think that's going to grow overall as an investment theme and the use case as a payments rail, what does that mean for sort of these investable crypto tokens, right? You could buy USDC, but the expectation isn't that that's going to go up in value. That's pegged to the dollar. Well, the answer comes in sort of the layer one platforms that the stable coins are issued on and that sort of manage the transaction volume. So the Ethereums of the world, the Solanas of the world, the Polygons of the world, each of those platforms and their sort of core tokens do have some derivative benefit from the increase in stablecoin adoption. And again, so I think there is this question about sort of the reasonable use cases and where is their intrinsic value in crypto. I think what we're seeing from the retail market is there is a lot of heart for sort of those assets that do have some reasonable benefit from deregulation over the next 4 years.
So we just heard from Thomas Pettifee, Interactive Brokers Group, a competitor.
A competitor.
How do you guys, as Public, compete against the interactive brokers of the world and the other electronic platforms? What's your pitch in the marketplace?
Yeah, so I think we, similar to interactive brokers, we offer a wide variety of asset classes, right? I think you mentioned some of them at the outset, Caroline, but I think, again, equities, crypto, options, and then a full suite of sort of fixed income offerings, basically meaning to be a more or less one-stop shop for sophisticated people who want to invest. And I think the distinction between, investing on Public and investing somewhere like interactive brokers comes down to, we serve a sophisticated clientele, folks who are professionals in their daily lives, want to be serious about investing, but they may not be sophisticated traders, right? And I think a lot of the platforms that we compete against with the breadth of sort of asset classes that we offer really do focus on a sort of more narrow, active trader, highly sophisticated trader type. And I think while we certainly serve many of those clients because we offer a wonderful value proposition for things like trading options, where we're the only platform that does offer a rebate on every contract traded, and so we see a lot of that active trader volume coming to us. We do focus on a broader sort of overall spectrum of the population and folks that are sophisticated, are professional in their daily lives, and want a platform that sort of can meet them on those terms while recognizing this isn't their full-time job.
Yeah, and I've had the good fortune of speaking to Yannick, the CEO, before, as he's doing a Series D and bigger funding rounds and offering more and more to your relatively sophisticated clients. A lot of the backlash that came in prior years, and we think of GameStop and 2021, was about financial literacy and a celebration when you did a trade rather than a realization of what you're actually putting on. I think of the rise of leverage bets on a MicroStrategy, for example, that's occurred in big way this year. How are you getting that narrative across without being patronizing, but also without dumbing all of this down for a sophisticated group of investors, that this is actually what you're buying, and here are the potential for loss, and here's the potential for winning?
Yeah, so I think there are two mechanisms. One, I think it's recognizing we are a self-directed platform, right? And our job is to show up with the asset classes that our customers want to buy, and if that includes MicroStrategy and the various derivative ETFs that sort of lever MicroStrategy on top of that, that's our job, is to provide what our clients come and ask for. And what we want to make sure is that there's sufficient context in the user experience, in the user interface, as they're going through their daily motions to trade these assets, that they can find all the information about them, right? Every bit of sort of fundamental information about each of the companies, including some alternative data, right? So for MicroStrategy, for instance, we do have all of the data available in terms of how many Bitcoin does it hold, what's the current premium that it's trading to, and making sure that's available for investors as they go through those sort of so they can learn by doing as they go through their daily mechanism. The second thing, and it's really growing in our use cases and how we do make sure our customers have all the information available to them, is sort of the use of AI. I think actually, we do talk a lot about where are these sort of critical use cases for large language models and for that technology in our space. And one of the critical ones we've found is exactly that, is gathering sort of all of that information available to a retail investor, which never had more great content available to retail investors than we do today. But that volume of content is getting to a place where it's overwhelming for people that, like I said, aren't professionals. And so putting that into a place and summarizing that into a single sort of bite-sized nugget of, hey, why is this asset moving? What explains sort of these changes over time is incredibly valuable to those folks. And then, that sort of first layer of AI-generated, our system's called Alpha. So our Alpha-generated content that explains sort of why an asset is moving is super helpful. And then we do give them the opportunity to sort of interact in a chat-based interface with Alpha to sort of dive a level deeper. So I think like the comparison I make a lot is, for the professional investor market, folks show up, they look at their portfolio, and where do they go to find out why their portfolio or why their assets are moving in a particular way? It's the Bloomberg terminal, right? That's not accessible to the retail market. I think as we think about how do we help the retail market get that same sort of strength of having a Bloomberg terminal in front of them, it's by synthesizing all of the available information via Alpha into a simple interface.
Stephen, we've had 2 great years in the marketplace, equity markets, S&P 500 up 20% plus both years. What are your clients telling you about their outlook for 2025? Do you see it in trading flows? Do you see it in conversations? What are you thinking about next year? I mean,
post-election, the activity's been ripping. I think retail has come back in a very strong way. Again, I think most of 2024 was a significantly strong year relative to 2022 and 2023. I think post-election, it's hit a new fevered level, and it's been sustained, right? I think, having been doing this for almost 10 years now, seeing sort of those spikes in flows like we saw in the couple of weeks after the election, I'm always like, all right, we're going to revert to the mean. We're going to come back down to earth. That is not what we've seen. We've seen continued, sustained, high volume of, incremental dollars coming into the market, incremental trading volumes, and it's been barbelled too. I wouldn't say it's only been on the highly speculative end of the spectrum, as you might expect. I think as we've seen long rates rise, I think we saw the 10 years almost at 4.6. As we've seen long rates rise in the last few weeks, we've also seen a lot of heart for retail investors, investing in sort of longer duration fixed income assets, right? Take advantage of the, 6, 7, 8% corporate bond yields that are available at sort of the low end of investment grade and the high end of high yield.
7-month highs for those yields at the moment, certainly attractive. To that end, what are your clients asking you for the latest and greatest in terms of product development, what you want to see? It was interesting, we started off this very show by talking about the impact of passive investment and what are the volatility that's bringing to the market. But how are you seeing people wanting to change their execution methods and indeed some of the options and the way in which they lever?
Yeah, I think we've caught up with a lot of the requests. I think as we zoomed out a few years ago, I think, there was this barbell demand from retail investors. One, better fixed income products on one end, everything from treasuries to corporate bonds, delivering those fractionally, right? And that's something that we built out last year, and we've really focused on sort of in this higher for longer rate environment. And we now have, I think, what is the best fixed income and bond trading platform available to retail investors on their phone and on the web. On the other end, I think it was very options focused. So, we saw a strong demand for sort of the full suite of options trading. Zero DTE on indices has been incredibly important. I think now as we look forward into the next year, one of the big things that we have left to build out, and I think one of the things where we're seeing increased demand is just the sort of extended hours and the overnight trading that we've talked about a lot. Again, I think volumes are still muted, but I think as we see sort of many of our competitors adopt that part of the platform and adopt that sort of trading venue, we are seeing more demand across the market for that. So I think that's something, we're looking at early next year. Lastly, again, continued investment in sort of these AI features to help bring all of the available market information and content into a synthesized and summarized form for retail investors to be able to follow their portfolios efficiently and effectively.
Hey, Stephen, thank you so much for joining us. Really appreciate it. Stephen Sykes, he is the COO. The company is named Public, is online trading platform, and that kind of rounds out that segment there, talking about the online trading platforms, again, taking bigger shares with a lot more investors as well. Again, a quick check on this market. S&P, we were trading down 1.3%, that's 78 points. NASDAQ's off about 1.8%, 373 points. Going over to the yield space, 10-year Treasury, pretty flat here, about 4.58% on your 10-year. In the commodity space, WTI crude oil up a little over 1%, $70. And Bitcoin, calling it out for Tom Keene and his Parisian Cafe, off 1.5%, 94,200 for the crypto. Coming up, uniting the worlds of chess and finance. Yes, we're going to do that. We speak with a 5-time world chess champion. That's coming up.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ही बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back to Bloomberg Markets Special Edition as we go transatlantic. Caroline Hyde here in London, Paul Sweeney in New York, and we simulcast too across platform, TV and radio. And we do this as the market sinks basically as we head towards the end of the year trading. We're currently off by, well, let's call it 1.8% if you look at the NASDAQ 100. 387 points to the downside, dragged lower by Magnificent Seven, Nvidia, Apple, Microsoft, Tesla, Amazon, all on the red. On the green, actually not many names, it has to be said, but it is a lot of consumer names. Pepsi doing well, Starbucks, Mondelez as well. So keep a close eye on some of these stocks that do manage to be in the green amid the general sell-off. 10-year yield, flat as we call it, 4.58. We're at a 7-month high. We're looking at New York crude currently up 1.1%, Paul.
Caroline, thank you so much. We appreciate that. You know what? Right now, this is really going to be fun. For the first time, North America is hosting the prestigious FIDE World Rapid and Blitz Championships, chess championships, taking place in the heart of New York City's historic Wall Street district, including a special Wall Street gambit uniting the worlds of chess and finance. Joining us now to discuss is FIDE Deputy President Vishy Anand. He is a 5-time world chess champion. Wow. Vishay, welcome. Thanks for joining us here.
Thank you.
Talk to us about why you're in New York. Talk to us about this tournament. How important is it, and how important is it to have it in America?
Okay, so historically, the Classical World Chess Championship, that is the long time 6-7 hour format, is the most important and remains so.
Okay.
But over the last few years, we've started to work on the rapid and blitz format. So the rapid is 15 minutes plus 10 seconds per game per player.
Wow.
So already much faster. And then you have the blitz, which is 3 minutes and 2 seconds per player per game. So highly sped up. This, as you can imagine, produces a lot of excitement. It's very fast-paced, pulsating. You can actually sit there and go, ooh and ah, you know, it's that sort of event. And it's important for us. Second thing is, we had the candidates tournament for the Classical World Championship in Toronto in April this year. And we're very, very excited that we have a second important event in the Americas within 1 year. And, you know, it's part of something we're trying to do. And so, you know, there's been a lot of excitement, a lot of growth in the U.S. in chess.
Right.
Famously, I think Queen's Gambit was the thing which kind of triggered it.
That was great.
Yeah.
Now, I got to ask you, as a chess person, did you think that was a good representation of the sport and some of the people in the game? I mean,
yes, I have only 1 or 2 quibbles.
Okay.
The rest is very authentic and felt very natural. I mean, you could easily see yourself in that person's shoes. I think it was very accurately done.
Let's talk, though, about a woman versus a man. And that's not what's actually occurring. There's a women's chess spotlight as well, I understand. So how are we seeing demographics play out in the world of chess right now?
It's becoming a global sport. One of the things that's happened is that technology has managed to make it a truly global sport. Earlier, if you lived in a country where there were not a lot of chess players, chances are you wouldn't know how to get into the game. Now that problem has been solved. You can watch a game no matter where you are. There are live streams, there are broadcasts. You can follow the game in multiple platforms. And so it has become an ever more global game. And that is reflected here. I don't remember the exact number, but it's a very large number of nationalities and more than 500 participants in the men and women sections together. And I should say, it's the open section and the women's section. In a sense, the women can play in the open section, but not the other way around. The thing is, there is still a gap, but more and more women are starting to beat male grandmasters. The gap is narrowing. There's always been a kind of gap, but it's narrowing. And so we hope this will trigger more and more women coming to participate in the game as well, because it's quite easy to do.
Right. And this event in New York City, you've got some serious players here. Tell us about who's going to be playing.
Yes. So,
in addition to yourself.
I'm not actually participating. I came here in my capacity as deputy president. Official duties, but we have almost everyone in the top 20 or top 30, bar 2 or 3. It's the strongest ever edition. So in all the editions history, this is the one which has the highest average rating, highest average historical record, all that. A performance record, I should say. And it's fantastic that we're able to host it in Wall Street.
Yeah.
A very good location. And that also kind of segues into our theme. We're having this conference, the Wall Street Gambit, talking about chess and finance. Again, there's a lot of similarities between the two, and there have been a lot of crossovers. A lot of former chess players migrated into finance and went on to be very, very successful. At one point, there were companies like Bankers Trust and all which were hiring chess players exactly for that reason. But the other thing is, I would say that with all the technological development with AI and everything, the relevance, one of the biggest connections I see is that chess has kind of been ahead of the curve. from the finance perspective, I would say just slightly to the future of where finance will encounter AI, which is what happens when AI becomes very, very good at what you do. And because chess is a game with, it's finite.
Yeah.
64 squares,
right.
Thing. It's finite, so the computers were able to solve it, not solve it, but get better at humans much faster.
Mm-hmm.
And as a result, learning how to interpret that information has become a key skill for us. Now, finance is, of course, much, much more complex and may not be reduced like this, but again, as computers get better and better at different areas, our experience might be relevant there.
I'm interested, Vishy, as many would say, and we've had on the program before, Paul and I, talking to Jenny Just about how you educate people around poker playing, and women in particular, and understanding risk and probability and ultimately reading people. With poker and professional poker comes money. And interestingly, with Wall Street comes money. What are the sort of prizes you're having to offer within the world of chess to bring about more and more people who are at this intersection of Wall Street and chess and wanting to be able to sort of tempt those that might be a little bit more financially motivated?
Yes, prize funds in chess have been growing. Clearly, as the popularity of the sport grows and our broadcast audiences are larger than ever before, so the money is increasing. There's a record prize fund for these World Championships, more than $1 million. But, we have to keep expanding and getting more. That's clear. So this is part of our, it's a very important event for us because we get an incredible number of spectators. It's our second most watched event after the World Championships, and that's why it's so important as we connect with more and more people and hopefully attract more sponsors to the game.
And the Wall Street Gambit, that has some Wall Street players going to be playing in this, right? Like, who's playing?
That's right. Well, there are famous people in the world of finance, like people like Ken Rogoff, Boaz Weinstein, and all, who are all former chess players and quite serious chess players. And so we're trying to play in that connection.
All right, how do people watch this? Is there a stream somewhere, or?
There will be a stream, but you can also attend the conference.
Okay, and that's being held where? Downtown?
Yes, I don't have the.
Okay, I'll find it. I'll get it before we're done.
It's basically at the venue.
All right, and you can check out the stream as well. All right, excellent, really interesting stuff. Vishay Anand joins us. He's a 5-time world champion and FIDE deputy president joining us here in studio. They've got their chess event going to be down here in Lower Manhattan over the next several days, so that's a good thing. Caroline Hyde, markets still selling off, maybe a little bit accelerated there.
Yeah, and it does feel like we got some risk aversion, or maybe just call it thin liquidity, people wanting to take their, bets off the table, if we're going to try and use some sort of chess acronym as well, putting their players off. At the moment, with NASDAQ 100 off by more than 2%, so we're at really session lows at the moment. It feels as though the Magnificent Seven, the technology names, are being sold the hardest at the moment, Paul.
Yeah, absolutely. And we saw that, in past sell-offs. And again, what we haven't had this calendar year is a real sell-off north of 20%. We haven't really had that. We had an 8% sell-off back, I guess it was April or several months ago, but we really haven't had that 10% plus that a lot of strategists will tell you is healthy for a longer-term bull market. So I'm not suggesting this is it, but again, we haven't had too many drawdowns, as the kids say.
Yeah, and let's put it, NVIDIA did actually hit technical correction a week or so ago, and NVIDIA is the biggest points drag. But you put it into perspective. These are companies and stocks that are up more than 100, sometimes 180% over the course of the year. So a little bit of profit taking just as we end up and tie the rest of the year closed.
Yep. All right, Caroline, it was good fun here today. Enjoy the weekend, everyone. We will be back I certainly will be back next week. This is Bloomberg. Good morning.
Top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Names that move markets are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is no backwards in recycling. There is no backwards in treating pollutants in the water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services, even in time of crisis, as well as to see the long term and deliver good result, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew in Washington. Coming up this hour, MAGA argues with Musk over immigration, a story that's developing before our eyes today. We'll get up to speed with Bloomberg's Adriana Lowenkron in Palm Beach as Elon Musk warns of a dire shortage of talent in Silicon Valley, exposing some big divisions here when it comes to this critical issue. We'll discuss as well with Congresswoman Haley Stevens of Michigan. The Democrat will join along with our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. We're glad you came along. You made it to the Friday edition of Balance of Power, and we start as usual on Wall Street, where conditions have been deteriorating throughout the day. We want to focus on the markets first with Bloomberg's Natalia Knijevic with us from World Headquarters in New York. These numbers are not inspiring here, Natalia. A 90-point loss, the S&P 500, a 20% gain on the VIX. What's going on?
Right, so we see some sell-off today, and this is mainly driven by big tech shares. We see NASDAQ is down by 2%. The Bloomberg Magnificent 7 index is down by 2.6%. Of course, some of the biggest Mag 7 stocks are moving lower. Tesla is moving, it's now down by 4%. We don't see any major news, but sources I spoke with are saying potentially some retail traders are are taking profits. They want to sell tech to harvest year-end tax loss. Volatility, as you mentioned, is moving higher. We see the VIX index is now trading at around 17. It's not too dramatic, but still it was at 14 yesterday. Keeping an eye on Bitcoin as well. Cryptocurrency is moving lower for a second straight day, and over the past few days it lost more than $10,000. Keep in mind that there's also a big options expiration date today. More than 14 billion contracts in Bitcoin expired today. It always creates volatility. And then moving into the bond market, we see that Treasury yields are moving slightly higher today, and 10-year yield is now hovering at around 558.89. But as I mentioned, liquidity is very thin. It always amplifies any moves in the market, but we will keep an eye on big tech as well.
Yeah, holiday light trading. Natalia, thank you so much for walking us through this. We'll get back with Natalia a little bit later on this hour, see how the numbers are faring. Pretty tough combination, though, right? Stocks down, the S&P 500 certainly, in this case, the NASDAQ composite as well. Bitcoin following. That option story is really important and something to follow, but the idea of increased volatility today is super important with the VIX up over 20% right now. This could be the way we end the year. We've been talking so much about a Santa Claus rally, we start wondering if maybe Santa came a little bit early. As we turn now to our top story of the day, and it is something pretty remarkable to watch unfold here as Elon Musk gets into quite the argument. The Washington Post and the Daily Mail, both with the headline, a MAGA civil war. Newsweek calls it right-wing warfare. Are you up to date on this? Call it what you will. A loud argument here over the use of work visas in this country. H-1Bs specifically. Now, if you watch Balance of Power, if you listen to us on Bloomberg Radio, if you watch us on YouTube or on Bloomberg TV, this is a conversation that we've had underway here for some time. A couple of years, as a matter of fact. Remembering that work visas and dreamers were not part of the conversation in the Senate deal that emerged with regard to border security in the latest year. Well, here we go again with work visas. Trump supporter Laura Loomer, forgive the setup here, it's a little complicated. Laura Loomer criticized Donald Trump's choice of an Indian-born tech entrepreneur, Sriram Krishnan, as a senior policy advisor on AI. She doesn't like Krishnan's previous support for removing caps on H-1Bs. This set off a firestorm on Twitter that eventually, as I mentioned, involved Elon Musk as well as Vivek Ramaswamy. They both want to see more H-1B visas to bring more talent into this country, and it seems we're at odds here when it comes to MAGA with regard to immigration reform. Hadriana Lowenkron is posted up in Florida right now following every move that's coming out of Mar-a-Lago, joining us live from Palm Beach. Adriana, it's great to see you. Hope you had a great holiday. How big of a deal is this going to be when everyone gets back to town?
Well, it's interesting. I mean, not only is this the latest example of political discussion taking place on X, which we're seeing, quite a lot of, and Truth Social and all of the technology being this platform, but it really does potentially set the stage for what could again be a rocky rollout of Trump's proposed, immigration plans, and keeping in mind that he spent much of his campaign railing against illegal immigration, a lot less clear on specific plans for legal immigration. The folks I've spoken to have maintained there's a big difference, that Trump has said that he is for legal immigration. But the question is, to what extent and how he addressed, and how so far has he addressed it specifically in the tech industry, which he really hasn't done much of. So of course, you have Ramaswamy, you have Musk. These are people who, have benefited from something similar, completely at odds with these far right people who are also supportive of Trump. And so maybe we will see a rift. I mean, this is really, as you said, happening before our very eyes, but much bigger than the rift. I mean, this is a huge policy thing that we're going to see.
Elon Musk tries to clarify with a sports analogy. He says this is like bringing the Jokic's or Wembys of the world to help your whole team, which is mostly Americans, ! Win the NBA. Who couldn't understand that, Adriana? He says thinking of America as a pro sports team that's been winning for a long time and wants to keep winning is the right mental construct. I don't know if lawmakers are going to see it that way, or Trump supporters for that matter, but enter Bill Gates, apparently, who has had very strong feelings about this. The founder of Microsoft has talked a lot about making it easier to get work visas and bring in foreign-based talent to Silicon Valley. And there looks like there's news here, Adriana. You can tell me. I don't know if Donald Trump intended to post this on Truth Social. If you're with us on Bloomberg TV, he writes, "Where are you? When are you coming to the center of the universe, Mar-a-Lago? Bill Gates asked to come tonight." Adriana, is that the guest of honor this evening?
I mean, we'll see. I, for one, have accidentally sent things to the wrong people. This could just be an example of that. Perhaps it was supposed to be an individual message to someone. He does mention, "Where are you?" He mentions X, so perhaps a reference to Elon Musk. But of course, the bigger question, as will there be this meeting? And this, of course, would be just the latest in a line of tech executives and going back to what we were saying earlier, where there is now this division with regard to the immigration, and there has been a similar rift on the same matter during the first administration when Trump had limited that H-1B program, which drew the blowback from these tech people. Now we're seeing this kind of coming together. Trump has even said everyone wants to be my friend, or something along those lines, pointing to the meetings with the Tim Cooks, with the Zuckerbergs. And so, if he is the latest, that could, again, be the latest example of this coming together. But the immigration stuff doesn't pan out the way that some of these executives like Musk, et cetera, want it. Maybe we'll see another rift. But as of now, this is, they're lining up as seen in Mar-a-Lago.
Yeah. Well, good thing nothing's complicated here. See, this is why Adriana's posted up in Palm Beach. We need somebody to be watching this on the daily. It's great to see you. Get back to Washington safe and sound. Adriana Lowenkron. It sounds like Bill Gates, Donald Trump may get together for a little kofefe at Mar-a-Lago. I wonder what Haley Stevens makes of this whole story. I'm glad to say the gentlewoman from Michigan is with us, Democratic Congresswoman Haley Stevens. Great to see you, Congresswoman. I hope you had a great Christmas, happy Hanukkah, and the rest. Welcome back to Bloomberg TV and radio. I don't have to go through the whole story again for you here, I'm sure, but a conversation has been prompted over the use of work visas. I'm guessing as a Democrat, you might see this as a positive development. Will H-1Bs and will Dreamers be involved in any debate over border security in this new Congress?
Well, I'll just say that as a science and tech policy evangelist, we welcome the conversation around H-1Bs and high-skilled workers. And in fact, as a member of the Select Committee on China Competition that has been in place for the last 2 years, this is something that we heard over and over and over again from stakeholders, Joe, that we need to staple green cards to degrees, that we need a plan to attract and retain global talent in this country. Our laws are based off of last century. They are holding us back, and they are impeding our competitiveness. And look, I'd say that Elon Musk maybe knows a thing or two about it, given his immigration history and given his employment base and given, frankly, the role that his companies are playing, not just here in the United States of America, but across the world. And so we need access to that talent. I think that could be very interesting. It maybe be a smart move of the Republican governing majority if they could do something for high-skilled workers. And of course, our dreamers, who we care so much about, who've only known an American life, who were born here, who are taxpayers, who are contributing to society, raising families. We want that parity as well.
Yeah. Congresswoman is correct. Elon Musk once held an H-1B visa, but it does bring up the bigger picture here. And in the short time that we have to talk today, Congresswoman, I'd like to ask you about your hopes or maybe your concerns about working with this Republican majority in the new Congress, knowing that Elon Musk and Vivek Ramaswamy are going to be on the phone. Maybe picture them on one shoulder for the speaker and Donald Trump on the other shoulder. Who's actually running the show here, and how do Democrats find their posture in this Congress?
Well, it's certainly a new dynamic, and Trump, President-elect Trump, is the ultimate chameleon. This is certainly a different approach to governing than what we saw during his first term, which frankly was a lot of governing by Twitter and a lot of chaos and confusion. Now it seems like the oligarchs have come in. Some people, though, with business experience as well. And I'll campaign ferociously, but when it comes to governing, I want to find ways in which we can come together. I'm really hoping that we continue to look at strategic competition, that we look at innovation here in the automotive heartland where I am in Michigan. Our automakers are watching, and they are global, and they need access to the trade policies, the materials, the workforce in order to succeed. We don't need disjointed policy, and frankly, we need an outlook here. So I do plan to use the power of the pen and my abilities in the Congress to advocate for the regional economy that I'm so proud to represent, the hardworking men and women all across Michigan who are contributing to incredible outputs and who are competing against the likes of BYD. There are changes afoot in the auto industry. It is a very aggressive time. We don't need to start unnecessary trade wars at the expense of people's bottom line. And that's something that we're seeing here. So, we got a new dynamic on our hand. Obviously, I'm in a minority party in the House. It's a tight minority. I think they're going to need us on occasion. So I'm going to go for my scraps, and I'm going to make my points.
I believe all of that, and I hope that you'll spend some time with us when you get back to town. Haley Stevens, it's great to see you. Happy New Year in advance. The Congresswoman, Democratic Congresswoman from Michigan, Haley Stevens, on the eve, I can say, right, of the 119th Congress. 1 week from today is when it all begins. That's when the swearing-in will take place. You'll see all the lawmakers with their kids in the chamber, and we'll get to the matter of choosing leadership. Whether the Speaker remains Mike Johnson is something that we'll be tracking very closely next week. We'll assemble our signature panel next. A lot to talk about with Rick Davis and Jeannie Shanzano, as you would only find right here on the fastest show in politics, Balance of Power on Bloomberg TV and radio.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge. Only on Bloomberg. Context changes everything.
Changes to the H-1B program are going to be harder, or I should say easier said than done.
right? It makes sense to many of us. It makes sense in the context of the economy as it sits today. Certainly, you can have both, right? You can close the border. You can also allow the most skilled in. That there's no sort of internal disagreement there. But the issue is, I think, MAGA Republicans, it's not what they want, right? And while Trump doesn't have to get reelected in 4 years, he can't get reelected in 4 years. House Republicans have to get reelected in 2 years. Senate Republicans have to get reelected 2, 4, and 6 years from now. So they have to answer to the MAGA base.
Rob Casey, Signum Global Advisors, earlier today on surveillance here on Bloomberg TV and radio, with big questions about the future of immigration policy in this country as we prepare to bear down on some pretty important debates when it comes to border security. What about the other side of the story? When we talk about comprehensive immigration reform, it does include things like actual legal immigration, work visas, even dreamers, as they're called. The deal that was struck in the Senate that never did become law earlier this year didn't acknowledge any of them. And now we've got a serious debate underway, certainly on social media, involving Elon Musk, Vivek Ramaswamy, and the MAGA world when it comes to the use of work visas, which both Musk and Ramaswamy would like to see enhanced, reformed, and a move that could be at odds with Donald Trump's approach, or the so-called MAGA approach to border security and immigration. That's where we start with our signature panel. Joining us this Friday, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. She is political science professor at Iona University. Rick is partner at Stone Court Capital, our Democrat and Republican, respectively. It's great to see you both. Happy Friday. Welcome back to Bloomberg TV and radio. Rick, I want to start with you here. Knowing how much time you spent working in the aim to find comprehensive immigration reform in your time spent in the U.S. Senate with John McCain. Of course, we went through this again with George Bush. And we talked about this over the course of this last year, that we were only getting to one part of the story here, and that's border security. This is a messy debate underway right now, and frankly, there's some pretty off-color and racist commentary on social media that we don't need to get into on this program, but I wonder if there's a silver lining and that it expands the debate over immigration to include a lot more people. Rick, what do you think?
Yeah, it sure sounds like we're headed to a comprehensive immigration reform proposal from the Trump administration, shocking as it may be. And I think we've, exposed the underbelly of this whole debate. I mean, it was very simple all during the campaign, just to talk about the border, lock down the border needs to be secure. Right. And, 60, 70% of the American public agreed with that. Now we're starting to see all kinds of other related issues, which includes dreamers. We had a conversation about that earlier in the week and what's happening with them, and detention facilities. But now we've hit probably the biggest return on investment for any immigration plan you could have, which is H-1Bs. 38,000 smart people who come to the United States in various capacities. It's not just tech. Who create a lot of value for our country, and an overwhelming large number of them become citizens. So it's amazing to me that nobody thought this was going to be an issue when you had the tech bros come into the aid of the Trump campaign with money and technology, and didn't think that they weren't going to have this number one thing on their platter.
Can't wait to hear your thoughts on this. Jeannie, knowing, of course, that we wouldn't have Elon Musk likely in the U.S. if it weren't for the H-1B program. I believe Jensen Huang, the force behind NVIDIA, same claim. Vivek Ramaswamy tweets, normalcy doesn't cut it in hyper-competitive global market for technical talent. And if we pretend like it does, we'll have our blank handed to us by China. Is he right?
Elon Musk and Vivek Ramaswamy, and quite frankly, Donald Trump on the campaign trail on this issue are absolutely right. I loved the fact, by the way, that Vivek Ramaswamy decided to venture into things like Boy Meets World and Urkel and, Saved by the Bell. I don't know how many people remember these shows, but, he went to that cultural area. And the problem for Donald Trump is he spent this campaign talking about, in the most dehumanizing language you can imagine, the fact that immigrants, illegal, legal, and otherwise, because he never differentiated, are destroying our way of life and are taking American jobs. I just pulled 3 quotes where he talks about immigrants taking Black and Hispanic jobs. So now he finds himself trying to do the bidding of these tech bros and his friends who subsidize his campaign and are subsidizing his inauguration. And they are absolutely right on this point, but you can't have it both ways. And this is the problem that Donald Trump has. And he's going to have a really difficult time backtracking from the many, many horrific things he said on the campaign trail, which the base took very seriously, apparently.
Well, I don't know what people think we've been doing this whole time. This has been a critical component to developing world-class technology in Silicon Valley. It's how we got to space. If you want to go back and read the right stuff, we can go through that all over again. Rick, Elon Musk puts on Twitter here, thinking of America, he's got this figured out with the sports analogy. Thinking of America as a pro sports team that has been winning for a long time and wants to keep winning is the right mental construct. Do you think he's actually winning people over with this argument right now, or could border security now be at risk because of this?
No, if you put it in purely political terms, I mean, he's defining himself, right? He is picking fights with everybody. Whether he even thinks he's picking a fight, he thinks it's just good policy to go out there and do this. He's trying to explain it. He's taken on every comer. I mean, getting into a argument online with Laura Loomer. I mean, the most inexperienced political professional knows you don't get into fights in public with people like her. She's a crackpot. She's a racist, and yet he seems to give her elevation when he addresses it. So, I think that Elon Musk is going to learn the hard way in his experience in Washington as a public servant now, and maybe to just hold his fire on a few things. I mean, I'm sure by New Year's we'll be talking about the big argument between Elon Musk and Robert Kennedy over Ozempic. I mean, how many of these fronts is he going to really open up with his own team?
Well, boy, do you bring us to an interesting place here, Jeannie. We all remember what it was like in the first Trump administration. News by tweet, firing by tweet, hiring by tweet. You'd wake up at 4 o'clock in the morning, there'd be news. Everyone's running into the newsroom. Now we're going to have a whole other one with Elon Musk. And if you take a look, I don't know how many tweets he sent last night over the course of this whole debate here, but it was a firestorm. I don't know who's going to out-tweet each other, but could we have twice the confusion in the next Trump administration?
Oh, absolutely. I am expecting it. I don't think the man sleeps. Between him and Donald Trump, they go pretty much all night on Twitter and Truth Social. But the reality is the facts are on Elon Musk's side on this particular issue. That said, good luck making that case to the base. Their argument is very clear. We want immigration shut down in this country. We do not accept carve-outs, even for the best and brightest. And Donald Trump is going to have to make a decision. He wants to ensure that the economy is strong and that grocery prices are down. He needs immigrants. He needs the best and the brightest. He knows that. And yet he is playing to a base that is not going to accept that. And that is going to be the conundrum for him, not to mention the amount of money he has taken from the tech sector to get where he is today in his second term.
Our final minute here, Rick. You probably heard about Bill Gates. Unclear if Donald Trump meant to put this on Truth Social, but apparently Bill Gates is asked to come to Mar-a-Lago. They're going to sit down and talk. Remembering, I bet you were there. Bill Gates testified before Congress in 2008 about H-1Bs. He's passionate about this. He says more must be available. At the time, he said Microsoft was unable to obtain these visas for a third of qualified foreign-born job candidates that it wanted to hire. Can Bill Gates bring Donald Trump to the truth on this?
Well, certainly Bill Gates is a smart guy, and he smells opportunity here. So, look, I mean, this is the only thing we don't know. We know where everybody stands on this. Everybody's weighing in, except for one person, and the only person who matters, Donald Trump. He's been quiet about this. How many times do we see a firestorm break out on social media that he doesn't participate in? So, yeah, absolutely, that tweet was probably a mistake. But at least it gives us the moment to say, wow, now we've got Bill Gates coming to Mar-a-Lago. Can't wait to see what Donald Trump says about that. He's not going to make someone happy in this debate. But we have to remember, he's never going to be on a ballot again. So if I'm
all right, Rick Davis and Jeannie Shanzano, a little covfefe in the patio at Mar-a-Lago. Stay with us on Bloomberg.
You can have a baby anywhere you want. and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ही बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. Thanks for joining us here on the fastest show in politics. The Friday edition. Sounds good to say that as we gear up for the last couple of trading days on Wall Street. It has not been going terribly well today. As we told you at the beginning of the program, stocks selling off along with Bitcoin today. The S&P 500 down a little more than 1.5%, almost 100 points. And Bitcoin at the moment is below $94,000, down over 2%. What is up is the VIX. With an eye on volatility, the VIX ahead now by almost 22%. We are approaching 18 on the VIX with a 4.6 on the 10-year. And we'll have a little bit more on the markets as we make our way through this. But the Santa Claus rally not feeling terribly intact right now. With questions today in Washington, as we've been discussing here on the program about immigration reform. Yes, I said immigration reform, not just border security. With a big debate around H-1B visas, the work visas that bring talent from other countries, foreign-born talent, to places like Silicon Valley to help develop what has become, of course, the greatest technology in the world. This is something Elon Musk knows a lot about, as he had an H-1B visa at one point. He and Vivek Ramaswamy, of course, partners in the Doge, having at it with MAGA over the use of these visas. They both see a need for reform and an increase in their availability, which apparently is at odds with the MAGA world approach to border security. This is all going to have to be managed in the new Congress, which will be sworn in 1 week from today, with questions as well about sequencing. Do you do the Trump tax cuts first, or do you tackle the border? No one has an answer to that yet, at least a real answer that I've heard, until Ipsos got to work on this. Cliff Young has an answer, at least with regard to the American people. He is, of course, the head of U.S. Public Affairs at Ipsos, and with us here at the table. Cliff, it's great to see you. Happy New Year in advance.
And to you as well.
Hope you had a great Christmas. Thank you for coming in.
Thank you.
This is interesting. Priorities for Donald Trump in the first 100 days. The biggest priority for everybody, we've learned, is inflation. But after that, it's pretty clear what voters want with regard to sequencing. And it's the border, right?
Yeah, it's immigration, especially among the Republican base, and especially among the MAGA base. That is their critical issue. Now, based upon history, based upon the empirical record, new administrations have between 100 days and 6 months to get their agenda through. So I would expect the Trump administration to push forward as fast as possible policies related to immigration.
Okay. Does anything in this debate lead us to believe that it might turn out in policy? We spent all last year talking about border security. The deal that was hammered out, the Langford deal in the Senate, was about border security. Nobody talked about immigration or dreamers. Now we're talking about all of it on the eve of this Congress opening.
True, and the immigration issue is a fraud issue. It's complex and nuanced, and public opinion's nuanced on it. The vast majority of Americans are in favor of immigration, something like 70 to 75%. However, that's legal immigration, right? And so the border issue becomes very important. Border policies become very important. They suggest a way forward when it comes to illegal immigration, a way to stop it. And I believe the Trump administration will have to have some sort of initiative or a series of initiatives relative to that if they're going to speak to their base.
Talk to me about what else is on this list, because the question that we've been facing is, when it comes to sequencing, you do the border first, you do Trump tax cuts. Taxes are way down the list here at 9%. What do you make of that?
They're abstract for people now.
Is that
the taxes haven't been part of the debate for a while now, right? You can think of the 80s and the 90s when we all talked about middle-class tax cuts. They haven't been. Really, it's about cost of living. That's why Trump won. He rode that wave in. He has to do something relative to that. And then it's immigration. He really needs to throw a bone to the base, and I expect him to do that within the first 6 months.
Americans want the next president to restore trust in institutions, you have found. But half are worried. Cliff, about what?
Well, the half that didn't vote for Trump, right?
Okay.
And so we have to understand it's very political in orientation, in perspective. This is a typical data point that we find after every election. The vast majority of Americans want to come back together, want to unify. Whether that happens or not is another question, but that at least is an aspiration at this point.
That's interesting. You talk about the other half, because we keep hearing that there was a mandate. When you think about the sort of the rhetoric that we've heard around this election, following the polling that you conducted over the course of, 2 years leading us to that point, how close to the truth is the analysis?
Somewhere in the middle.
Yeah.
Isn't the truth always in the middle?
Sure.
So on the one hand, Trump definitely goes in with a mandate. He controls Congress. He obviously is headed to the White House. That's very important. That allows him to push forward an agenda in the short term. That is, once again, in the first half of the first year. That's when most things happen. But his win was minuscule. Nothing more than 1% or 2 at the national level. It's 1.5 now. Nothing more than a point to 2 points in key swing states. So it's close.
Nothing more than a seat in the House of Representatives.
There we go.
Like.
It's
so that's
very,
not
very
really
close.
a mandate, is it?
Well, it depends how you define it. He has control.
Yes.
Tenuous control of both the Congress.
Tenuous is an important word.
True. But both of the Senate and the House, and he obviously he has the White House.
Sure.
There's something there, right? He can work with
he can
that.
get an enormous amount done.
Exactly.
But to think if the wind blows, you don't have a Republican majority in the House could be a problem as we work our way.
No, we're a divided country. We're a 50-50 country. That's where we are today. That's what this election showed. And I think that, the point I would want to make is that even though it's 50-50, public opinion is nuanced. Americans are nuanced. Even on immigration, there's a continuum of what Americans think about it. They're not absolutists on everything. They believe immigration on the one hand is super important. They can see the importance of visas like H-1B1, about 50%. But obviously it's divided and polarized by whether you're blue or red.
H-1B is going to be a tough sell, though. This is, this is jargon for a lot of people.
Right now, it's a bit of catnip, a negative catnip for the Republican base. But when it goes to the economic issues, when you frame it as such, Americans agree with it. Obviously, I think in the short term, it sort of gunks up the system a bit because they don't have a lot of time to implement ultimately their agenda. It's more of a distraction than anything else.
How about when it comes to mass deportation? You ran numbers on this, and even Donald Trump himself has indicated, as he did in an interview on NBC following the election, he's kind of worried about the way the optics might look here when the raids begin, assuming that's how this is going to work. What do Americans think about this before it happens?
It's very abstract right now. We have to understand that. And so when you ask Americans straight up, more than 50%, about 52, 53, 54, depending on how you ask it, are in favor of mass deportations. But then when you put sort of caveats there, we put conditions there like splitting families or hurting the economy, hurting job generation, that support falls in a general sense. It goes into the 40s and the 30s. Republicans are stalwarts. They support it no matter what happens. But Trump is very right. The optics on this could be very negative. You could imagine crying children being separated from their families.
Right.
This will not play well, especially if you're trying to push through an agenda in the short term. This could once again cause problems in doing that. Actually, at Ipsos, it's one of the ballot questions we're tracking. Do you support or oppose the immigration policies of the Trump administration? We'll be looking at it very closely because it has, I think, little upside and a lot of downside.
Inflation is the biggest concern, the biggest priority for Americans. If the Trump tax cuts combined with tariffs, assuming all of this happens, create a reflationary scenario, what's that going to mean for approval ratings for the new president?
I would just add in closing up the border, causing a problem on the economic side in terms of labor. That could really undermine his position. Once again, I think the first 100 days I'm looking at, usually in the first 6 months, new administrations have a mandate, have pretty strong approval ratings, but any of these things can undermine it.
Boy, we've got a lot to learn in the new year together. Think of the crazy stuff you're going to be polling in 2025. You're writing these questions already, I'm guessing.
Yeah, we're reflecting already. It's going to be interesting.
A nice reflection over the course of the holidays with Cliff Young. Ipsos, great to see you, and Happy New Year. Come back and see us in 2025.
Yeah, thanks for having me.
As always, another year of great analysis with Cliff Young here on Bloomberg TV and radio. I'm Joe Matthew in Washington. I started our conversation with an eye on the markets because it has been a bit of a concern. I want to get back to Natalia right now. Natalia Kinijevich with us in New York with her eye on the markets. It seems to be getting worse as the day goes here, Natalia. What's going on?
It was a really quiet morning, but it is getting worse, as you mentioned. We see the S&P 500 is moving down by more than 1%, but the biggest sell-off is now across the biggest technology shares. The NASDAQ 100 is down by 2.3%. The Magnificent 7 index is hovering about 3% lower. We see stocks like Tesla are down by 4%. Tesla is now the second worst performing stock in the S&P 500. Liquidity is thin. Keep in mind that any big or small moves can be amplified. When it comes to treasuries, the bond market, it's not that dramatic, but we see that 10-year yield is now moving higher. It's now hovering at around 560. What is dramatic, though, is the volatility. We see that the VIX index has moved from 14 to about 18 in a matter of just 1 day. So clearly those moves in big technology shares are driving volatility higher as well. And of course, Bitcoin is moving lower for a second straight day. Cryptocurrency lost about 1% today. But keep in mind, today volatility can be bigger than usual because today is a big day for options expirations. About 14 billion dollar contracts in notional terms, which means in US dollars, expire today. And those big expiration days are always increased volatility in any asset class.
So maybe not a huge shock there. What stocks are you watching? I'm just seeing a lot of red on the screen here. You referenced Mag 7. It looks like they're all pointing lower right now. Natalia, is this a fundamental story or technicals? When you look at the charts, what are they telling you?
Yeah, so it looks like we don't see any big fundamental news. Some people are referring to the fact that some retail traders can be selling big tech stocks. We don't see any big Santa Claus rally as many people had expected. So probably some local profit taking. We will keep an eye on markets, of course, on Monday, because as of now, we don't see anything dramatic. We keep an eye on other stocks that have some fundamental news. So one of them is Delivery Hero. This company expanded during the pandemic. It's now trying to cut costs, restructure its operations, but the stock is down today, and the reason for that is that Delivery Hero and Uber was trying to sell its unit to Uber in Taiwan. But local authorities in Taiwan blocked the deal, saying that these two companies are the biggest competitors, and this deal, this merger, will provide more negative effect rather than economic benefits. Another stock I'm keeping an eye on is Arena Group. It was up by 18% at one point today, and the reason for that is the company said the New York Stock Exchange accepted its plan to regain compliance with continued listing standards. Just as a quick reminder, the company earlier this year got a notice from the New York Stock Exchange saying that it's not in compliance with minimum stockholders' equity requirements. Arena is now under monitoring compliance for the plan up until April 2026. If it doesn't make progress, it can be delisted. And finally, I'm also keeping an eye on energy names. We see some volatility across commodities, specifically natural gas. Here in the United States, nat gas is moving slightly lower, driven by warmer than expected weather. However, in Europe, natural gas is falling on news that Russian President Vladimir Putin is saying that it would be impossible to arrange new transit of natural gas via Ukraine to Europe, and Europe will be looking for more partners, but it wouldn't be that dramatic as a couple years ago, because now natural gas exports from Ukraine account for about 5% of gas demand in Europe.
That's good analysis, Natalia. Something that we'll be talking about with Bob McNally at Rapidan Energy a bit more in our next hour. Natalia Kadijevic, many thanks once again, keeping us honest here on the markets as we cover politics in the nation's capital. Not great to see stocks down. Not great to see the VIX up like this, almost 23% higher this hour. Pretty remarkable now with an 18 handle on the VIX. We'll stick with this for you on Bloomberg TV and radio, and a lot more to follow, including our conversation with the incoming chair of the House Financial Services Committee, Republican Congressman French Hill of Arkansas. Next on the fastest show in politics, this is Bloomberg.
There is no backwards in recycling. There is no backwards in treating pollutants in the water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services even in time of crisis, as well as to see the long term and deliver good results, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
People really start where the beginning should be, which is focusing on the economic impacts. And I think that's really what you get out of that's really fundamentally, I think, what you get out of Hill. It's been touted a lot that his private sector experience in a bank helped him get the chairmanship. I'm sure that's true, but where I think he's going to excel and really differentiate himself is he's really going to focus on market impacts as well as just the kind of the regulatory overkill.
It's Terry Haynes, the founder of Pangea Policy, talking with us upon the election of French Hill, the Republican from Arkansas, as the incoming chair of the House Financial Services Committee. Congressman Hill put this together just a couple of days ago and joined us shortly after his election to the chairmanship. Of course, a week from today, the 119th Congress will begin, and Hill will be in charge of one of the most important committees in the House of Representatives, certainly with regard to the issues that we follow and talk about here every day on Bloomberg TV and radio, from the SEC to crypto to so much more, the idea of stablecoin that we've talked so much about with French Hill, not to mention rules of the road, regulations. My colleague Kaylee Lyons spent some time with Congressman Hill following the election to talk about the work that lies ahead of his committee. Let's watch.
We don't have a learning curve here. We can take the lessons that we learned in the 118th Congress by producing FIT, which was a bill that got 71 Democratic votes here in the House, and the work that Chairman McHenry did with Ranking Member Maxine Waters on a stablecoin bill. Both those will be priorities coming into the new Congress. We want to work with the Trump administration and Senate Banking Committee Chairman Tim Scott and try to get all of us on the same page as to how do we proceed in the 119th. We've got new interest in the Senate. Bill Hagerty of Tennessee introduced his own bill in and around digital assets just before the election.
Well, so when we consider, though, the actual market structure questions here, obviously when FIT 21 was passed, Gary Gensler was the chair of the SEC, as he is now. That will be changing in the new administration. Presumably it will be Paul Atkins. And I wonder if you're more comfortable with the SEC having greater authority over crypto compared to the CFTC under that kind of regime, if it's no longer going to be Gary Gensler at the helm.
Well, we didn't draft the FIT 21 legislation because Gary Gensler was the chairman of the SEC. We drafted it because we thought there needed to be clear, transparent, fit-for-purpose rules of the road for digital asset companies so that tokens that are on a decentralized functioning blockchain are treated differently. They're not treated as securities, and we put that in law and defined exactly how to do it. And I think that's still important for the SEC under President Trump and Paul Atkins as the chairman-elect, because there's some things you can do by exemptive relief at the SEC, but there are other things that you actually need statutory work for. We're prepared to work with the new chairman, the new commission, but permanent changes come from making legal changes, not just doing exemptive relief at the commission. So I prefer a legislative solution, but I want to work with the chairman and see how we can work together.
Well, and I do wonder about the working with not just other chairmen in the House and in the Senate, but others in this administration, like, say, David Sachs, Congressman. What is your relationship like with him or with other agencies that we understand the White House will be giving a voice here in the shaping of crypto policy?
Well, we had a great relationship with the banking regulators, the Treasury, and the White House and the Biden administration on this topic, and I expect this will be even better in the Trump administration. The National Economic Council with Kevin Hastert and Treasury Secretary Designate Bessent, the banking supervisors that President Trump will appoint. All of us will work together along with the SEC chairman on crafting the best policy for digital assets. We want America to have a growth policy and a fairness and a transparent policy on how to have a digital asset economy here in America that produces growth. We want to add employees here. We don't want this business driven offshore as we witnessed during the Gensler and Biden-Harris regime.
Well, we know the president-elect has talked about making the U.S. the Bitcoin capital of the world. He's also floated this notion, sir, of a Bitcoin reserve. Do you have any concerns with an establishment of that?
Well, actually, I think Senator Loomis floated the idea of the reserve, and President Trump heard about it when he was at the Bitcoin conference in Nashville during July. This is something that has to be looked at carefully if that has benefits to the U.S. Treasury and to the U.S. balance sheet. And I'm sure Congress and members on both sides of the Capitol will do that.
As we get into other banking matters as well, would you support a move to abolish the FDIC and to fold its duties into the Treasury Department?
I think you've got to look at whatever proposals that the incoming administration has as part of a matrix. Like, what is the big picture objective here? Most people in Congress want outstanding, coordinated, harmonized supervision of our financial institutions that encourage new banks, encourage growth, encourage fair-minded rules and capital standards, and they don't want to create a situation where our community banks are going out of business because they can't comply with all the rules, and we want tailoring. That is, we want smaller banks with simpler balance sheets and simpler strategies to be treated differently than a big, large, complex company like Citibank or J.P. Morgan Chase. But we're willing to listen to what proposals that the administration has on supervisory changes.
So that's not a no, that you wouldn't necessarily be opposed from the start on abolishing the FDIC or shifting the way in which that insurance mechanism actually happens in the U.S.?
Well, I don't personally. I've never seen anybody submit an idea like that. I've read about it in the newspaper, but I think deposit insurance is an important feature. We want to make sure it's run right. The FDIC has poor leadership right now, but it's been an institution that's carried out its mission in a very tailored way. And I would just argue that we have mostly in the Biden-Harris regime a personnel problem, not a structural problem. But the supervisory process in our country between state and federal supervisors has gotten convoluted. It's gotten in conflict with each other. It's not harmonized. It's not coordinated. And so there are a lot of improvements that need to be made, in my view, in bank supervision. So again, I'm open-minded about how those could be made, but just taking one out of context and saying that you should do away with the FDIC, I don't think is particularly the right way to go about it.
Well, if it is to stick around, what do you see, whoever Trump taps to lead the FDIC and the OCC for that matter, as their chief priority? What would you hope that they deal with first?
Well, first, tailoring, following the law, making sure that they're light touch regulation where it's deserved and heavy complex touch regulation where it's merited because of the nature of the business. Further, I think they have to understand that fintech is here and AI is here, and they need to deal with that reality and make sure that all banks of all sizes and broker-dealers of all sizes are treated in the right way according with their business plan. But debanking businesses because they're involved in the fintech or the crypto business is not a good approach, and that's what we've seen in the Biden-Harris administration. And in my view, that's a key point to get changed as we change administrations. We do not want customers debanked because they're in a legal business, and we don't want to see banks and thrifts or credit unions or broker-dealers treated inappropriately by the supervisors.
The incoming chair of the House Financial Services Committee, Congressman French Hill, the Republican from Arkansas, in conversation with Bloomberg's Kayleigh Lyons. We'll be talking a lot more with Congressman Hill as the agenda comes together in the new Congress. The new Congress, of course, being sworn in a week from today. With our eyes on Bitcoin, trimming losses, by the way, following that crypto conversation with the Congressman. Bitcoin currently just below $94,000, down about 2% right now, and what has been a down day for Wall Street, largely. The S&P 500 still down about 1.5% right now, 95 points, and the VIX is on the rise. Not the highest we've seen today, but still up over 20%, approaching an 18 handle on the VIX. With our eyes on volatility and the expiration of contracts today, we'll keep tabs on these markets for you. Hour 2 of Balance of Power is on the way here on Bloomberg TV and radio as we turn our attention to Ukraine and energy prices. Bob McNally from Rapidan Energy joining us next, right here on Bloomberg TV and radio.
Are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ही बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European Trading Day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew in Washington. Thank you for joining us here on the Friday edition. As Ukraine counts the days, Joe Biden has left in office with news today that the U.S. is preparing another relief package for Kyiv, a security package, as Russia threatens to push Ukraine out of the Kursk region. We have news on this from Bloomberg's Natalia Drozdiak that we'll be bringing you shortly in a conversation later this hour with Melinda Herring at the Atlantic Council. We'll turn to the matter of energy in a couple of moments and what is next in the new year here with the Trump administration. Bob McNally from Rapidan Energy will be joining us this hour with analysis from our signature panel. Jeannie Shanzano and Rick Davis are with us here on the Friday edition of Balance of Power. Hard to ignore what's happening on Wall Street, though. I do want to make a quick check on the markets. We've seen worse numbers today, but not a lot. With the S&P 500 down about 90 points right now, 1.5%. The broad market heading lower. The NASDAQ composite down about 2%, almost 400 points. With Bitcoin also trading lower today, off its lows, back above $94,000, but still down 1.5% on a day that has seen increased volatility, sending the VIX up about 3 right now, 18% to almost 18. And the price of oil a bit higher as well. WTI crude up 1%, just over $70 a barrel. With news from Ukraine, you will not read this anywhere other than Bloomberg. An important story with the headline that says it all. Ukraine risks losing all the Russian land it seized in months. Bloomberg's Natalia Drozdiak behind the story, and we have other headlines involving Ukraine from Washington. But Natalia, I want to get to this matter first because we've talked about the advances that Ukraine has made in the Kursk region. What's going wrong?
So basically what we're seeing is that they're slowly losing their grip on that territory in the Kursk region, which they seized last summer. Since their peak, they've lost about half of that territory as Russian forces continue to grind them down with the help of North Korean troops. Now, U.S. officials expect Ukraine will only be able to hold on for a few more months at most before they have to retreat or, worse, are encircled and potentially suffer high casualties. That's especially if Russia launches another more concerted counteroffensive, which they could do potentially in the next month or two. And this is a key priority for Putin because they will want to clear out that region before any negotiations start.
You mentioned North Korea. Indeed, some 12,000 North Korean troops have made their way into this conflict, reinforcing Russia. To what extent has this been a game changer? And I ask you that because John Kirby was talking about them earlier. Says more than 1,000 North Korean casualties have been recorded in just the past week alone.
I think this underscores one of the major successes of Ukraine's incursion into Kursk. They've managed to attrit Russian forces in a major way, but also the North Korean forces. They used U.S.-made ATACMS, these long-range missiles, fired those into Russia, targeting the North Korean troops, and have done so in a way that has not resulted in catastrophic escalation.
With that said, the U.S. set to approve another security package. There's been so much talk in Washington about getting money out the door before Donald Trump is in the White House. Is that the point here? Are these monies we've heard about before, Natalia? What do we know?
Yeah, I think this is just part of the Biden administration strategy to push as much support and as much aid as they can to the Ukrainians before the Trump administration takes over at the end of January. I think there's some concern about what happens to aid to Ukraine going forward, especially with President-elect Trump, signaling that he wants to bring the war to a rapid end. That I think will end up being more tricky in reality, just given how complex the situation is. Both Ukraine and Russia are digging into key demands. Russia wants to see Ukraine give up its goals to join NATO, and it wants to demilitarize. Both of these demands Ukraine won't agree to.
What's this winter, the rest of this winter, going to be like for Ukraine? Natalia, Russia on Christmas morning directed more than 70 cruise and ballistic missiles, 100 drones. The Christmas Day strikes against Ukraine's energy infrastructure, reminding us of how effective Vladimir Putin can be using cold as a weapon.
Absolutely. I think this is, part of the very cruel tactics that we've seen from the Russian side over the last few years, especially targeting that energy infrastructure at the height of winter and on Christmas Day. Nonetheless, this is just part of their playbook to really degrade Ukrainian morale as much as possible. And I mean, it hasn't worked up until now. I think that's something that the Ukrainians have shown, that no matter their efforts, they're going to keep fighting. So, as I mentioned earlier, that's another point that will make it tricky to reach a ceasefire deal that both sides are happy with.
Great reporting from Bloomberg's Natalia Drozdiak. Natalia, thank you so much for the update today on Balance of Power. I'm Joe Matthew in Washington, where we've also got our eyes here on natural gas prices. Sticking with Ukraine, European natural gas prices specifically up over 4% today after Vladimir Putin expressed doubts about a deal to maintain gas flows to Europe via Ukraine. He says it would be impossible to arrange a new transit contract before year end when the current agreement expires. Let's go to school right now with Bob McNally, who we learn from every time we talk with, the president of Rapidan Energy Group. Bob, it's great to see you. I hope you had a great Christmas, and thanks for coming back to talk to us on Bloomberg TV and radio. How important is this development today, knowing how little natural gas we're talking about?
It's pretty significant. The market was hoping to see that those flows resume, and Europe is having a more of a normal winter. It's cold. Inventories have been drawn down. They've gotten lucky in the last winter, so it's a return to normalcy, and hiccups like this are unwelcome. And you also have the incoming head of the European Commission, the Polish, will have it for 6 months, and they're going to prioritize tightening sanctions, including on gas, even further. So, here we have a combination of geopolitics and market forces, which are, surprising here with normal weather to deliver a bit of a rude shock in the wintertime here.
What's your broad view then, Bob, as we head into the new year here and the Trump administration, which has vowed to cut energy prices by half? We've talked about the prospect here before, but there are other influences on prices. It's a global market, as we've already been discussing.
It sure is, Joe. The president has control over certain things. He can and he will, with a stroke of a pen, ease the regulatory burden facing U.S. energy and companies. He can impose tariffs that can impact energy. He can tighten sanctions on Iran. He has many powers, and he will exercise them starting on day one, and all of them are important. Some of them would cause oil prices to go down, as we've discussed. Some go up. But as you mentioned, the price of oil is priced in a global market with global supply and demand fundamentals and geopolitics driving that, and many of those forces out of the direct control of the president. So the president's going to, rediscover. He learned this, I think, in his first term. There's certain things he can control. There's certain things he can't. But how much we produce in this country will be a function of the global price, more so, I think, than any regulatory changes we'll see.
Well, you mentioned an important word there, and that's geopolitics. To see the headline yesterday, Israel directly striking the capital of Yemen following these repeated attacks by Houthi rebels that have caused some pretty major disruptions in shipping in the region. That's a pretty good example of what can go wrong here, and I wonder how concerned you are about this escalating.
We remain pretty concerned about that, Joe. As we've talked about, phase one post-October 7 was Gaza. Phase two was Hezbollah. Neither of those two regions, threatened much oil. Now we're moving to Iran and the Houthis in Yemen. And it's important, after that latest strike, the Houthis threatened Saudi Arabia. That's very important, because the Houthis, remember, they had lobbed missiles at Saudi Arabia and the UAE in the past, but they've had a sort of a deal, détente for the last couple of years. They warned, hey, if this continues, that deal is off. And as Israel goes after Iran, and as President Trump goes after Iran, now we're starting to involve the most important energy resource for both oil and LNG.
Well, with what you know about the Trump national security team, at least the names that have been mentioned, and I know we have to go through a confirmation process for several of them, will this administration be more effective in managing these issues than the Biden White House?
I think it will. It'll have a sharp change in direction. Just about everybody I'm aware of coming in on the NSC and the State Department, for that matter, and Treasury, are hawks when it comes to Iran. They look back at the first Trump term and they see a success with the Iran sanctions policy. They look at Biden and they say he threw that away. He allowed them to resume oil exports. Now they got the money and they're helping Russia in Ukraine, of all places. So they are more determined than ever, and I think able to go back and get leverage on Iran by going after those exports. And I think China's already gotten the message and is already starting to pull back. They take most of that Iranian oil. They see the writing on the wall, and I think this incoming team will be effective early in imposing these sanctions on Iran.
I'm looking at AAA's national average for a gallon of unleaded, $3.03. That's a national number here on the 27th of December, Bob. I don't mean to get too simple on you here, because I know you're a pretty sophisticated analyst when it comes to this stuff, but Donald Trump has essentially promised to turn that into $1.50 a gallon if he cuts prices by half. Is that possible?
It's possible, but as we discussed last time, it would have bad side effects. The only two ways to get the oil price or gasoline price down to $1.50 that I'm aware of would be to crash the economy into a catastrophic recession, and that would not be enjoyable. Or you call up Saudi Arabia and you convince them to put every barrel on the market. I don't think they would do that. But as we discussed, even if he could, at $1.50 a gallon, Joe, U.S. shale oil, i.e. energy dominance, dies. You cannot have $1.50 pump prices and a thriving shale oil sector. Period. End of story.
People should know that you worked in the Bush administration, the W. Bush administration, in the first term as part of your very long resume, Bob. And one of the things you were tasked with doing was dealing with utilities, the electric grid. There's been a big conversation in Washington about renewing the grid, about enhancing the grid, about protecting the grid. Will this new Congress be the one to do it?
I hope so. In some ways, the stars are aligning, because certainly the oil and gas folks, the gas folks, are very aware of the permitting challenges. They've wrestled with this for decades. In the way the Supreme Court has made life a little easier in undermining some of the bureaucratic crust that is developed. And the clean energy community, Joe, they realize you can't get solar and wind deployed at scale unless you can connect it to the grid. And now you have with AI, we want to get nukes connected to the grid for AI. So in some ways, you could have a coalition of the willing, if you will. However, Joe, we're still somewhat cautious at Rapidan about the odds of getting a bill done just due to partisanship in Washington. It's too bad. It became close last year. It's not a 0%, but it's close to a jump ball.
Bureaucratic crust. What a great term. Would also be a great band name. People should also know Bob is a world-class drummer, and I hope you'll consider that. Right? That'd be a good punk rock, bureaucratic crust. I think we're onto something. Bob, it's great to see you, as always. Thank you, and Happy New Year in advance. Come back and see us in 2025. He's the founder and president of Rapidan Energy, with his eyes on the energy markets. Bob McNally. I'm Joe Matthew in Washington. Glad you're with us here on the Friday edition of Balance of Power. We've got a lot more to follow, including our signature panel, Rick Davis and Jeannie Shanzano, on the way in next, right here on Bloomberg TV and radio.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersachi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Thanks for being with us on Balance of Power on Bloomberg TV and radio. It's the Friday edition. I'm Joe Matthew in Washington. 1 week from today, as we've been telling you, the new Congress will be sworn in, the 119th. It's a big festive day in Washington. The lawmakers bring their kids, big group photos, electing the speaker. It's supposed to be the layup, the easy part, but there are questions about how easy leadership elections are going to be for Republicans in this new Congress. Spent some time talking earlier in the program today with Haley Stevens, the Democrat from Michigan, on working with Republicans in the new Congress. Yesterday, it was Sean Casten of Illinois. Neither of them terribly sure about how all of this is going to go, knowing that Republicans will have a majority of one if Donald Trump gets all of his picks to join his administration. That's where we start our conversation with our signature panel. Rick Davis, partner at Stone Court Capital, Republican strategist and Bloomberg Politics contributor, joined by Jeannie Shanzano, senior democracy fellow with the Center for the Study of the Presidency and Congress, our Democratic analyst. Great to have you both with us here on Friday as we think big thoughts ahead of next week. Jeannie, it's going to be an interesting moment for Democrats. Watching Mike Johnson, I guess, be elected all over again, or will he? What's your thought today?
Yeah, and Hakeem Jeffries has been very clear. This time around, Democrats are not going to come and save Mike Johnson. It is all up to the Republicans. And I think, you know, at this point, I would say more likely than not, he gets narrowly reelected. But he already has one person, Tom Massey, who has come out publicly and said he will not vote for Speaker Johnson. And so one more, and he may have a fight on his hands. And I think a lot of this at this point depends on Donald Trump. Does he come out publicly on Truth Social or otherwise support Mike Johnson, or does he let him sort of flap in the wind? And of course, there's nobody else there waiting in the wings at this point that we know of who might be a contender. And so that works to Johnson's benefit as well.
A lot of this has to do with posture, what posture the party will take. Will it be the party of no? Will there be opportunities to work together? And I think maybe there will be. Rick, with such a thin majority here, we talked yesterday, as I mentioned, with Sean Casten, Democrat from Illinois, had this to say about cooperating with the other party.
I think you'll continue to find that Democrats are willing to work constructively with those Republicans on a bipartisan basis, as we have, but we'll have to see what they bring together. There's, you know, I like to remind people that there were 2 fistfights in the House this last term. They all involved Republicans, and trying to figure out how they're going to get along together is going to be a challenge for this next term, at least in the House.
Well, Rick, there's going to be a fistfight about the border and immigration, it seems, in the outset of this Congress. And based on everything we're hearing today, that could include actual legal immigration, things like work visas and H-1Bs. Is that where Democrats come in here?
You know, I think the first real test is going to be that speaker's vote. You know, process matters here. January 3rd, nobody gets sworn in until they have a speaker. Speaker actually swears in all the members of Congress. So you got to get that done. And then 2 days later, January 6th, guess what? You have to approve the election. We remember that very well from the last go round. And so you've got one Republican, as Jeannie said, who's already said, I'm not voting for you. Two more, and it's a done deal, right? You'll need Democrats. And the Democratic minority has already said, we're not going to go bail these guys out again. And so the question is, does Donald Trump understand this process? Does he want a rocky road to confirmation from his own election? Because that's what's happening on the 6th. Donald Trump won. And so, you know, there's going to be a lot of work